Thank you so much for being with me, Caterina Simonetti and Peter Shafiq, on the markets, setting the agenda this Monday morning. Let's look under the hood ahead of the opening bell. Abigail Doolittle is with me, as she is every day. Abby, what have we got?
We've got some outsized movers this morning, Manus. If we look beneath the relatively benign surface of stocks up just a little bit, take a look at the shares of Apartment Income REIT. Blackstone is buying or taking private the Apartment REIT Air Communities for about $10 billion, a little more than $39 per share, multifamily within the commercial real estate sector. Fairly good. Region by region, they own in lots of different regions. Interestingly, this company went public just a couple of years ago, right now trading at levels around where it went public. Tesla up 2.3%. Elon Musk last Friday saying that Tesla robotaxi is on its way, and now we know that it will be unveiled in August. It's key for this company to find new sources of growth. And then Boeing, not so much, down about 0.9%. More mishaps for Boeing planes, this time on Southwest. There was a plane leaving Denver International Airport. A piece of its engine cover fell off and then hit the wing. The plane had to return to the airport, and those passengers then put on another plane, maybe a little bit rattled, going down to Houston, Manus.
Okay, Abby, thank you very much. Abigail Doolittle on the very latest moving stocks. Coming up, Secretary Yellen's balancing act.
When the global market is flooded by artificially cheap Chinese products, the viability of American and other foreign firms is put into question.
Janet Yellen wraps up her visit to China. We discuss the latest news flow right here on Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic, because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
This is Bloomberg.
China is now simply too large for the rest of the world to absorb this enormous capacity. Actions taken by the PRC today can shift world prices. And when the global market is flooded by artificially cheap Chinese products, the viability of American and other foreign firms is put into question.
Yellen balancing stark criticism with the efforts to strengthen its ties during her China visit, framing China's strategy of boosting its manufacturing capacity as a global concern and urging the leaders to focus on revving up domestic demand. Bloomberg's Enda Curran is with us, and there's some pretty punchy talk from Yellen when she's in country, in front of her audience. She didn't hold back, did she?
No, she was both critical and cordial, like you say, Manus. On the criticism front, she really went for China when it comes to accusing them of exporting their excess capacity in the manufacturing sector. And interestingly, she said that's not just hurting US companies and jobs. She said it's hurting global companies and jobs too. So maybe a hint there that she's trying to build an alliance when it comes to drumming up support for this overcapacity idea. So she had stinging criticism for China's economic growth strategy, criticism of their use of subsidies. Of course, she also brought up China's support for Russia. She made a warning there about what that might entail. And she encouraged China to drum up its own domestic demand, enough domestic demand that would buy and hoover up the production that China is churning out from its factories rather than send it overseas. And the thinking is that these are fairly hawkish comments from Ms. Yellen because the US has some economic leverage over China at the moment. But of course, China pushed back on this criticism too, and they say that it's merely laying the groundwork by the US to put more tariffs or other export controls on China's economy.
And we are just seeing there's a Bloomberg story. It's probably before you sat down in the seat, and this is the result of the Yellen meetings. You have the deputy finance minister saying that China and the US will discuss balanced growth in their domestic and global economies, and that there will be 2 agreements to that effect. If I said to you what was the most tangible thing, I mean, we're now getting a little bit detail that there are going to be these two agreements, but what will change, and what do you think will change? Is it the theatre and language, or is it actualities?
I think there's 2 ways of looking at it. Some people are saying that Ms. Yellen has gone there to lay the groundwork for potentially extra tariffs or other kind of restrictions on Chinese goods or investment into China. So she's laying the groundwork that the US is not happy with what's going on in China's manufacturing sector. It's giving them an unfair competitive advantage, so giving them cause and reason for some actions down the road. But it's also a view that, you know, this just merely adds to the idea that both sides are kind of playing time out now at the moment. They want to stabilize relations. Yeah. China, of course, is watching the clock. They're not going to make any major moves this side of the US election. They know US policy could change dramatically once we get to November. So both sides are watching the clock a little bit. Both sides are talking their book, but really just stabilizing things until the next big moment in US-China relations, and that's probably not going to come until after that election in November.
No, clarity will be delivered then, and just on the additional line there, they will continue to exchange views on financial stability, sustainable finance, and anti-money laundering in the financial working group meetings. So that's the commitments that they have, the yield on the Yellen trip. Enda, thank you very much. Meanwhile, the Biden administration ramps up efforts to bring tech manufacturers back home to the USA. The Commerce Department awarding Taiwan Semiconductors more than $11 billion in funding to build a home in Arizona. The Secretary, Gina Raimondo, says this: "We will be making at scale the most advanced semiconductor chips on the planet here in the United States of America, by the way, with American workers." Mandeep Singh is with me from Bloomberg Intelligence. Again, this is round 2 of the stimulus. A couple of weeks ago was Intel. Today it's TSMC. How advanced is this deal? What are they going to be producing in the USA?
Yeah, look, I think the timing of it is clearly influenced by Intel getting a portion of the subsidies. And in this case, I think TSMC went from $12 billion in the first round to $40 billion in the second, and now $65 billion total in subsidy in investments in Arizona. So they're not diversifying the location. It's all in Arizona. And they are talking about doing 2 nanometer and 3 nanometer node manufacturing. So clearly they think, you know, it's viable to produce those advanced semiconductors here. A lot of details still need to come out in terms of, you know, what are the component suppliers doing? How are they thinking about packaging, testing? Because there's a lot that goes into manufacturing, not just setting up the foundry, which is the first step, obviously, but also all the other things that come with it. And probably the announcement of advanced nodes sort of indicates that everyone should be thinking about that over the medium term.
Well, the stock has accelerated. We were up 1.5% in the pre-market when we started broadcasting at 5 a.m. We're now up nearly 3%. What does this do, or what is this? Is this a significant step towards American security, chip security, relative to where we were?
look, TSMC has the most credibility when it comes to advanced node manufacturing. They still have 92% share. Samsung is probably the remainder when it comes to advanced node manufacturing. So if TSMC is saying we can do 2 nanometer and 3 nanometer in the US over the next 5 years, that tells you something that they should be able to do that at the gross margin they currently have, which is around 50%. So I think the subsidies kind of make it easier to offset that gross margin impact that everyone was worried about.
Okay, Mandeep, thank you very much. Well, certainly the advance in the stock price this morning says it all. It's cheered along. Coming up, we'll give you your morning calls, and a little bit later on, BlackRock's Tony DeSpirito joins me around the opening bell ahead of the earnings season kicking off this Friday with the big banks on Bloomberg.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
This junction, growth stocks have some kind of an immunity to rising bond yields, 24 basis points in the past 6 sessions. Tesla is bid up this morning. Why? Are they really going to step back from cheaper models? There's no real clarity around that. Kathy Wood piles in, goes large, looks large in the ARK Innovation Fund, buying Tesla, 9.8% of the fund, 9.8% holding in Tesla. There we go. NASDAQ is up 0.25%. S&P 500 also bid up. This is what the street is writing about this morning in terms of your morning calls. You've got KeyBank downgrading Skyworks to sector weight, expecting lower growth due to mounting competition. Citigroup upgrades Take-Two Interactive to buy, highlighting favorable risk-reward and compelling valuation. Finally, BNP Paribas downgrades Kroger to underperform. It's going to be a tough year ahead. BlackRock's Tony DeSpirito joins me next around the opening bell.
was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, you know, any given day it would be the head of a studio and, you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
The week with a very comfortable bid. They're cheering at the nice yen at the NASDAQ. Amazon is bid up. Morgan Stanley raises the price target there to $215. So we're slightly better bid. NASDAQ is strong. Again, there's a force to be reckoned with in the equity market story from the earnings front, really punching back against those higher yields. There is the opening bell. The rest of your assets look a little bit like this. You have got flat on euro dollar 108.40. You've just had Peter Shafiq with us talking about the scale of rate cuts in Europe relative to the United States could be higher. Yields are trimming some of their spike that we had this morning. We were up about 4 basis points when I came in at 5 a.m. We're now up 2 basis points. Again, the bond bulls are getting burned. Not are they getting burned, they're getting singed. But I wouldn't call it a complete collapse. There's not been a global run. And oil comes back by 1/8 of 1%. Again, just slowing down the sell-off in oil. It was up 4% last week in Brent. We're trying to work out what is the Iranian response to Israel going to be and how will that impact the oil market. One stock to watch is Tesla. The CEO, Elon Musk, has announced the EV maker will unveil its long-promised robo-taxi on August the 8th. Simone Foxman is with me. So this is the next promise, Simone, versus price cuts and product exits.
Yeah, Madison, this news coming in a tweet after hours on Friday, but what this really means is the prospect of fully autonomous vehicles. This would be, of course, transformative, maybe even changing the way Americans travel on roads around the country. And of course, that stands to bring big benefits for Tesla. It could either launch its own robo-taxi fleet, it could license the software to another service provider, it could sell them to others, it could do some version of all of these things. And that's why Cathie Wood has made the projection that in part because of autonomous vehicles, Tesla could see $100 billion in cash flow by 2027. The challenge is that all of this is extraordinarily speculative. At the moment, the FSD, full self-driving capability, still needs to be 100% supervised. And the company has rolled this out to more people, including it has a subscription service for about $199 a month. It's offered some free trials, et cetera. That's, behind the excitement. But at the same time, Dennis, as you referenced, this was dovetailed with that Reuters story saying that Tesla was scrapping that $25,000 car, in part because it wanted to focus more on FSD. I think the only thing that we see as positive here is that we're likely to get months of speculation as we await that August announcement, trying to better understand exactly what is going to be announced and whether it is that full promised autonomous vehicle, Dennis.
Okay, certainly rough and tumble, but it's good to see the stock back again, up 2% at the moment. So, thank you very much. Let's turn our attention to the airlines. Southwest and Boeing are struggling. This is the FAA announces an investigation concerning a Boeing plane. Abigail Doolittle is on the story. Again, more bad news about Boeing.
More negative news for Boeing, and Southwest Airlines is a part of this story as well. So yesterday, a plane was taking off from Denver International Airport for Houston. The engine cover flew off the plane and hit the wing flap. Can you imagine being on a plane having that happen? Not surprisingly, the plane then grounded, and those passengers were put onto another plane and sent to Houston. They arrived there 3 hours late. Now, this follows another probe for Southwest Airlines regarding an incident in March in LaGuardia Airport, and we, of course, all know Boeing's issues. The stock's not down all that much around this, so I think that despite the fact that there's a lot of headline fear and news around this, in Southwest, I should mention, last Thursday, there was an engine fire that prevented a plane from going from Texas to Las Vegas. Yes, another Boeing plane. I think that some of this is priced in at this point, given the fact that over the last year, Southwest Airlines down more than 10%, as is the case for Boeing. The S&P 500 up nearly 30%. The airline index itself up about 7%. So some real underperformance. Investors, again, to some extent, Southwest Airlines at this point actually up a little bit. I think the bad news to some degree is priced in, Manus.
Okay, Abby, thank you very much. Let's turn our attention to crypto. Stocks linked to the digital currency rising. This is Bitcoin, trades back above the $71,000 mark. Isabel Lee is with me. Isabel, again, punching in a pro-risk way for Bitcoin.
Definitely, Manus, and it's now around $72,000. The number to watch is 73,797. That's the high Bitcoin hit in March 14. And of course, as Bitcoin scales record high, crypto-linked stocks also soar. We have Marathon, Digital, and Riot all edging higher, up at least 4%. There's a big pop there in Marathon. In MicroStrategy, it's up around 10%. So what is really the optimism driving Bitcoin? It's up around 70%. Last year, it was up 150%. It's really the successful debut of the spot Bitcoin ETFs we've seen, which have amassed a net inflow of 12 billion and around 60 billion in assets. And really at the heart of this is supply and demand. There just really isn't enough supply as there is in demand, because it's a spot Bitcoin ETF, so these issuers have to back them by the actual Bitcoin, not derivatives or swaps or anything like that. And we also have halving, which is known to really boost Bitcoin's price. But bringing it back to stocks, we have Stifel saying that if this is Bitcoin's peak, it will signal a weaker stock market and a shift in leadership, because as you know, a lot of the people in Wall Street look at Bitcoin as a proxy for speculative fever, for froth, for excess. So that's something to watch. But for now, it's a good day for crypto-linked stocks, Manus.
Isabel, beautiful day for the crypto world. Let's turn our attention across to the banking system. Jamie Dimon presenting his annual shareholder letter, just as JP Morgan and other banks are set to report at the end of the week. And this is what he writes. These markets seem to be pricing a 70 to 80% chance of a soft landing. I believe the odds are a lot lower than that. Joining me now, it is Katie Greifeld. So words of warning from Jamie Dimon. It's not the first time that he has warned. Last year, he was also warned about a slowdown. Here we are again. It's just maybe a little bit delayed.
Here we are again. Yeah, of course, we always pay attention to his comments on the economy. He also talked a lot about AI. Jamie Dimon saying that AI, it could be as transformational as the steam engine. He said that AI could augment virtually every job. He also said, in addition to those soft landing thoughts, that inflation may be stickier and rates higher than expected. Of course, this comes ahead of those big banks taking the stage, the big banks kicking off earnings season. You have JP Morgan, Wells Fargo, and Citi all taking the stage on Friday. So JP Morgan, of course, they notched the highest annual profit in history of American banking last year. We'll see if they can put up a repeat performance. Of course, those numbers expected pre-market on Friday. Citi is also an interesting one, of course. Jane Fraser's big restructuring push, cutting thousands of jobs and entire business divisions. They're actually leading the big banks so far year to date. Wall Street loves a comeback story. But actually, when you take a look at all three of those banks, they're up double digits so far in 2024, handily outperforming the S&P 500 so far this year. Of course, when it comes to how sustainable that lead is, a lot hinges on this earnings season.
Okay, Katie, thank you very much. Our next guest weighs in on what's next for the equity market. Actively bullish. While the near-term pullback wouldn't be surprising, we see fuel for positive momentum to continue throughout the year, but selection growing more important. It is Tony DeSpirito, Global CIO, Fundamental Equities at BlackRock. Good to see you, Tony. So yields at 4.4, cruising towards 4.5%. People talking about 5%. Don't seem to be upsetting the equity apple cart yet.
So a couple of things. One is, I think it's always about earnings and valuation. On the earnings front, I see things as being very strong. The economy, if anything, appears to be accelerating. We certainly saw that with the jobs report on Friday. Really a blowout number. We see the ISM manufacturing, above 50 for the first time since September of 2022. So economically, things look pretty strong. Now, yes, in terms of valuations, if you look at the S&P 500 kind of on a naive basis, you'd say valuations look relatively high. But I think what that misses is a couple of things. One is the quality of the companies in the S&P 500 and the growth rate of those companies is higher than ever before. So we've never seen such profitable companies growing at this rate. And then secondarily, if you kind of look at stocks versus bonds, as you mentioned, if you look at the equally weighted S&P 500, the equity risk premium, i.e. the gap in yield, earnings yield on stocks versus bonds, looks almost exactly in line with historical averages.
Okay, so there's perhaps a little bit further to go. I mean, when we talk about the S&P 500 and the performance over the past month, we've gone through the AI and the Mag 7 as dominance, and that is still there. But if I look at the rotation into, as I was saying to my last couple of guests, into commodities and into financials, it's very, very prevalent. And again, you talk about selection being ever more important. To what extent do you want more exposure to those kind of cyclical sectors?
So I do think the broadening of the market, whether that's in materials, energy, or financials, as you point out, I think that's very healthy, a very healthy sign. So I really like that. And then, secondarily, I think it's really important that when you think about the major themes like artificial intelligence, themes like the adoption of a low carbon economy, that you look beyond the obvious, that when you take a bottoms-up perspective, over time, the winners and losers will evolve, the valuations will evolve, and so I think there's a real value add from an active perspective in those mega themes, if you will.
And that plays to what Jamie Dimon was talking about in his annual letter, and this is very, very real. We're all trying to understand what AI actually means, and he says this: over time, we anticipate that our use of AI has the potential to augment virtually every job. Think of the printing press, the steam engine, electricity, computing, the internet, amongst others. I mean, this is, he's the leader of one of the most profitable banks in the world, and it just shows you how pervasive AI is going to be. My question to you is this: when we go for breadth and we try to think about, well, where else can I buy apart from NVIDIA and maybe the poor man's Broadcom, do you look more globally? And again, I ask you this question because the valuations in the US relative to the valuations within AI in a global perspective, how much broader do you need to reach for AI?
Yeah, well, as you point out, I think there's two ways to think about it. One is to think about things more globally. Certainly, the U.S. has been the best performing market for over a decade now. And what that's meant is if you look at the U.S. in MSCI, it's now over 63% of the index. So the U.S. is becoming increasingly dominant market worldwide. But yes, there are opportunities to look more broadly geographically. In the fund I run, the Equity Dividend Fund, it's primarily a U.S. fund, but we've invested about 20% of our assets outside of the U.S. on that basis, in global companies, by the way. Secondarily, in themes like AI, I think the obvious winners are in the hardware layer, but as you think more broadly, you should think about data, right? Private data versus public data. Public data is a commodity. Private data becomes more valuable with artificial intelligence. So think about the companies that own that data and sell that data. They can sell it for higher prices as AI makes that private data more valuable. There's service providers who clean and organize data. They become more important. And then finally, think about all the memory that's needed to store and process that data, right? We're at the beginning of what could be a memory supercycle. And then you think about companies like in the financial services sector, where there's a lot of regulatory expense, a lot of SG&A overhead. A lot of that can be taken out through AI or reduced through AI, and the companies that are on the forefront of that, the larger banks, are likely to be the ones who get the most cost advantage, for instance. So I think there's a lot of ways to play the growth of artificial intelligence beyond the most obvious stocks. And again, that's where that bottoms-up valuation approach really comes to an advantage.
Yeah, and as you say, it's about selling data, mining data, and owning data is the breadth there. Look, we're seeing a bit of a bounce in Tesla. I know that you can't necessarily talk about individual names, but it is about the principle of where we are in the evolution of EV. These are about the megatrends that you talk about. Whether we think it's a short-term issue with electric vehicles, or is there something much more structurally headwinded for that sector? What do you think at this juncture?
Look, without a doubt, EV sales have slowed. We see it in the numbers. But long term, I don't think the trajectory is changing that much, particularly as new models, new vehicles come out, as battery life gets extended. You know, not only is this good for the environment, but it's also a great driving experience. So I would expect EV sales to continue to grow over time. You know, any adoption of new technology will have ebbs and flows to it. So this isn't surprising. One of my favorite ways to play it in my fund, the Equity Dividend Fund, has been through automotive tech. Companies that make automotive semiconductors, make connectors, et cetera, you know, they benefit not only from EV adoption, but also from the adoption of ADAS, advanced driver-assisted systems. And that's going to happen regardless of whether it's a gas engine or EV engine. So I think that's a great way of playing it. The other interesting way is through electric utilities. I mean, if you look at electricity consumption in the United States, it's been about flat for 20 years. And that's a combination of us moving to a more service-oriented economy, as well as just more energy efficiency, whether it's in appliances or lighting. But what we're seeing now is a real pickup in demand for the first time. Some of that's due to EVs, and some of that's due to data centers related to artificial intelligence. And so I think that's a trend that you can also play. And by the way, if you look at the valuations of utility stocks, they've historically traded at a discount to the S&P 500, but that discount has actually grown despite the great long-term outlook in terms of fundamentals.
Okay, it's certainly an observation on the electricity side, and indeed I had an energy company here recently and they were talking about the use of energy here in the US spiking relative to the underusage in Europe, and that is down to the data center growth here relative to what else is to come in Europe. Tony, thank you very much. Tony DeSpirito, my guest this morning from BlackRock. Coming up, pressure intensifies on Israel.
We have been increasingly frustrated, and again, that was a core message that the president delivered to Prime Minister Netanyahu in their phone call this past week, that if they've got to do more, they've got to make changes.
The pressure from the USA on Israel. That conversation next.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg.
The way I think about culture is they call organizations superorganisms. It's a collection of people, but the collection is greater than the individuals combined. So 1 + 1 is not 2, ideally it's 3 and greater. So if you were to look at a single person, a person has a set of core values, they may have dreams and aspirations. If you kind of map that to an organization, you can also think of the culture as your core values, personal core values turn into corporate core values, your organization's strengths and weaknesses. All those things collectively combined is something that we kind of put a label on it called a culture. A culture is like a muscle memory. It's very hard to change a habit. It's very hard to just say, hey, today we're going to define our culture as XYZ, we're just gonna change this way. Like, it doesn't work like that. It's a collection of people's habits. That's like, again, like a super organism. So you have to like really nudge and create an iterative feedback loop. It's a slowly evolving thing. So that's why it's so critical. Like your day-to-day decision-making, day-to-day operation, everyday execution is really dictated by the culture of your organization, not by a couple of like checklists. It's not what you write on the wall. It's what you do and live and breathe every day. And that is the culture.
think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Juxtaposition between the pop and drop in 10-year government bond yields. That's the underbelly to these equity markets. 10-year yields popped by a few more basis points this morning. That is Europe and Asia playing catch-up. We come back ever so slightly. The Russell 2000 up by 0.5%, even though we push these rate cuts into the longer grass. Nasdaq back to flat at the moment. You need to set your agenda for the rest of the week, and this is what it looks like. Minneapolis Fed President.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. intelligence.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See? I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo. We can do that. Bingo's my cockapoo. Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Ratio.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Eclipse Day. Alex.
I have a confession.
Oh, no.
I am eclipsed out.
Had enough?
It's, I mean, I feel
It hasn't happened yet. How can it be eclipsed out?
Because I feel like the media has made so much of it. Like, how many segments can you do? What will cockroaches think on the eclipse?
Wait a second. Of all the news out there, so much of it we've been worrying about, is it the end of it?
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I played drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the firing line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
So after seeing the stories of the blindness that comes from this, I'm like, I don't even care if I have glasses. I'll just see the pictures later.
Well,
I don't want to look at the
Didn't a certain president, the last time this happened, just look right up in the sky? He did okay.
Did he?
Right?
Yeah. He looked, famous picture, him looking straight there. But
oh my gosh.
I don't know. You gotta take that where it comes.
We got the glasses.
I will be on TV, so I will be on my show for television at 3 to 4. So, you know, for the one person who's tuning in, that's where I'll be. All right, Norma Linda, thanks a lot. Really appreciate it. Norma Linda joining us. Okay, the other headline of the day, we love it. It's Jamie Dimon, CEO of JP Morgan, and his annual letter. Lots of things to get through on this one. You know, he says that AI could augment virtually every job. So that was sort of the one thing he did talk about. Obviously, he doesn't like lots of regulation in Basel III. So let's dig into it. Allison Williams, Bloomberg Intelligence Senior Analyst, Global Banks and Asset Managers, joins us now. All right, Allison, what were some of the takeaways here?
So I think, you know, it's always interesting to hear what's on Jamie's mind. I think some things are consistent. He gives his views on regulation, which he feels like there definitely needs to be some changes, as well as the policy and the political front. You know, one of the interesting things this year was the 20-year look back. It's the anniversary of the JP Morgan Bank One deal. As you may remember, Bank One was actually the buyer of JP Morgan, and I was lucky enough to be at the dinner that night with the CEOs of both Bank One and JP Morgan, and certainly did not anticipate where we'd be 20 years later. But did anticipate that Jamie Dimon, even I think at that time, showed himself to be a patient CEO. He waited to take the job. He was selective. He took the job with Bank One. He was selective about the JP Morgan deal. He stored up his capital and was in a good position at the crisis. And so, you know, today when we're seeing a lot of headlines around some of his concerns, and again, certainly he does outline a lot of these in the annual report, it just really just puts into mind the risk manager that he is. And so while there's a lot of headlines about his talk about inflation, he's been very vocal about the world needing to be prepared for higher rates. I think it's just a way that he does his job and manages his company, thinking about the downsides, thinking about the risks out there, and sort of always being prepared to be in the best position he can.
All right, Allison. So those are, we always look to that letter for some long-term trend issues, and he calls out AI in particular this time. How about the short-term stuff? We're going to hear about the short-term stuff this Friday with the earnings starting. What are you looking for from JPM and maybe from some of the other big banks that we care about?
Sure, and there were a lot of call-outs about the great job that they've been doing, the great year that they had last year, and we really think that this quarter they're going to continue to, execute on all cylinders. I think that the net interest income story, as you know, that's sort of the big thing that everyone's watching. We've had a big shift in the market view on rates since the last time these banks have reported. But we think that JP Morgan will continue to show resilience in that net interest income and surprise investors positively on that front. Part of that is the credit card business, where it just continues to show very strong growth. And part of it is the deposit pricing, which has come in a little bit better than expected. So we think that's going to help JP Morgan. It's going to help Bank of America. The card side helping JP Morgan and Citigroup a little bit more, but also we may see provisions tick up, but that's not because of the weaker environment. It's more because the card loan growth continues to be strong. It's normalizing, and this tends to be the seasonally higher quarter for card losses. So think that we could get more resilient net interest income, but also higher provisions.
Yeah, let's talk about that, because last week Goldman Sachs' Marcus, lowered the rate on its savings account, high-yield savings account, which is 10 basis points, and I obviously use it. And I was like, dude, we haven't even had a rate cut. What are we doing? But that's clearly going to be good for these guys, but bad for me.
Yeah, so, I mean, for on the deposit front, really a year ago, I think it became big news with all the bank turmoil that deposit prices were going up, and consumers, I think, that saw those headlines, if they hadn't already been getting the yield, they were going after it. And so the yields have gone up. We saw the yields on loans go up, and then we saw the yields on deposits go up. And now we're at a place where, the question is, will those deposit prices continue to go up and sort of eat away at the yield? The reason why banks one benefit of banks if the rate cuts come is that those prices will come down, as you said. But then, for all of these banks, there is a question of, the deposits and what they can do with those deposits, excuse me, and there is a competitive aspect to it. And so there are times when banks are more aggressively pricing, and there are times when, as you said, for Goldman Sachs, maybe they're less aggressively pricing. Maybe they see, less of a need of what they can do with that money, or balance sheet management, because as we know, there is a cost to capital to fund that balance sheet, that there are higher capital requirements, there are other things you can do with your capital. And so I think these all kind of go into the mix of what banks are thinking.
Hey, Allison, are we going to hear anything this quarter from the banks about commercial real estate and the problems it may pose for the U.S. economy and maybe the banking system, or is that just a regional bank thing?
I think, it will continue to tick up. I think it is a broad, bank thing, but the regional banks, it's just more important to their earnings. So I was speaking before about card. If you look at card, the banks that I cover, especially JP Morgan, Citi, Wells, and Bank of America tend to be over-indexed to card, less so to commercial real estate. Of those four banks, Wells Fargo is really the one that sort of has a commercial real estate exposure similar to the regional peers. They have the largest U.S. office exposure across the banks I cover, but they also have an 8% reserve already against those loans. So they've been very conservative on that book. I think the newer worry, if you will, is the multifamily lending business. New York Community really sort of brought that to light. JP Morgan has the closest business to that, but they've talked about some underwriting protections they have there, just in terms of how they look at rents, and the way they underwrite being much more conservative. And so they've had, very good performance in that book over a long period of time. Still, people are going to look at it, but it's more of sort of a very long-term story for the banks.
I'm having a hard time getting excited about JP Morgan kicking off earnings on Friday. What's going to be for me and for you, the biggest surprise? Like, what are you most jazzed about watching when it comes to all the big banks, all the asset managers, all the guys?
I think the biggest surprise will be that net interest income resilience and just the fact that it does come in better than expected. It was interesting. Last quarter, all the banks generally beat on net interest income, but guided down. And so the stocks were acted, very negatively towards that. This quarter, I think there will be the resilience in the net interest income that could surprise to the upside. They will adjust the outlooks. The latter is expected. I think the other thing that I'll be focusing on, investors are going to be focusing on, is those investment banking fees. So there's been a lot of talk about bullishness for those fees. We also think that we could see a big jump in the fees, but we're still nowhere near compared to where we were at the 2021. So, you could see a big jump in fees, but the questions are going to be, how are things trending? IPOs, the volumes have been good, but, there's still a lot of questions from investors around some of the performance. We've had some good performers. There have been some not so good performers. We still have some valuations that, investors are waiting to get better. They don't want to go public and have to mark down those investments. So I think the pipelines and the investment banking fees are going to be,
right.
I guess, one of the more exciting things this quarter, Alex. Maybe not as exciting as we had hoped for earlier in the year.
Yeah, all right, we'll see. All right, Allison Williams, thanks so much for joining us. Allison Williams, she's a senior analyst. She covers all the big banks on a global basis. She does that for Bloomberg Intelligence. Before that, she alluded to, she was at Morgan Stanley Investment Management on the buy side, and where she covered the banks. And of course, when a couple of big banks get together, they need to court their large shareholders, and Morgan Stanley Investment Management is certainly one of those. So that's why Allison was on the front lines. And when those two, J.P. Morgan Chase, the predecessor, and the bank from Ohio, I can't think of the name.
I bet
Bank One.
I bet she's not watching the eclipse because
No,
she's hard at work. So,
Exactly.
I'm just saying. But I'm also looking at multiple countdown clocks now. Are we counting down to the eclipse special? Are we counting down to the actual eclipse? See, I'm just saying. This is a lot happening. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. Well, this Bloomberg Business Flash. Well, after Friday's more than 1% gain for the S&P 500, stock averages right now kind of muted. The much stronger than expected jobs report that we got last week, that focused traders' attention on the strength of the economy. They're going to turn back to the inflation outlook Wednesday. That's when we get the consumer price index. And traders' conviction on 3/4 point interest rate cuts from the Fed this year, that has been fading fast. Right now, the S&P 500 up 2 points, 52.06 on the index. The Dow Jones Industrial Average up 20 points. And the NASDAQ 100, 14 points higher. That's up about 0.1%. The 10-year yield right now, 2 basis points higher. That's at 4.42. The 2-year yield, 2 basis points higher. That's at 4.77. And, of course, this Friday earnings season that kicks off into full swing. J.P. Morgan Chase, Wells Fargo, and Citigroup will report. Now, strategists predict the S&P 500 companies will post their smallest year-over-year profit gain since 2019. And oh yeah, this is for Alex. And Bob Cinch, too, who wrote in.
He did. He agreed with me, Bob Cinch.
No,
Thank
well,
you.
You're all wrong. The U.S. is going to lose more than 30 gigawatts of solar energy during today's total eclipse, roughly the output of 30 nuclear reactors. It won't affect energy prices because they know in advance this is happening, so they're backup sources.
So
30 gigawatts.
So I love this very much. One, because this is such a Bloomberg angle. And two, I loved it so much, I have it on all my notes, and I want to talk about it all day.
Good.
So there we
Well,
go.
I'm certainly going to talk about it all day.
An
if
energy
you don't.
angle to the
No,
eclipse.
just the energy part. Everything
Sure.
else, whatever. Anyway, Ann Barry, founder and managing partner at Threadneedle, is joining us. Equity's doing nothing. Bond yields up a little bit. But before we get to all that fun stuff, Ann, are you watching the eclipse?
Absolutely wouldn't miss it. I remember the last one 7 years ago, Alex, and just standing out in Central Park with armies full of people. So I'm hoping to repeat the experience again today. It's a lot of fun.
All right, so she's not eclipsed out. Fine. Are you bond yield out at this point? That's my way of asking, like, hey, how much higher can yields go at this point?
Yeah, I got to tell you, Alex, I've for a while now stopped looking at bond yields as an indicator of where I should be putting capital to work. These usual indicators haven't been as consistent over the last couple of years. And so I've just really gone back to good old-fashioned fundamentals, esoteric signs, looking specifically at what might be good catalysts for the stocks individually to try and see where to play right now.
All right, so where are you guys, as you think about just kind of M&A in general, what's kind of your outlook here for the remainder of 2024? Because we've got, equity markets higher, but rates are still higher as well.
They are, but I do think that the actual backdrop for M&A this year has gotten a lot more interesting. If you think back over the last 2 years and you put yourself in the position of the boards of public companies, and I've been there, it's been a really difficult place to say yay or nay to getting deals done. We've seen a bit of an exception in the oil and gas space, Alex, that I know is your forte. And the reason for that lack of activity has been, yes, partly financing has obviously been a lot more expensive, whether it's been in cash deals or stock deals, but also because you just didn't want to be the board member who looked like a bit of a schmuck if you got the call wrong, because the macro is just so volatile and a lot of the key factors you didn't want to be selling too cheaply or buying too expensively. I think things have settled down a little bit now, which gives people more confidence to go out and buy. And I do think that we're going to see some names forced to do some M&A activity. And specifically, there are what I call these fallen angels from that 2020, 2021 pandemic era darling period, where I think some of these names are going to have to diversify or die, and it's going to force them to go and do some M&A.
So how do you play all of that? So, okay, if you're bond yielded out, so you're looking less at that, you're looking at the fundamentals, you do think M&A could be, it sounds like a catalyst. Talk to me about the sectors first in that you want to play.
Well, let's take a look at consumer, for example, Alex. And, that's one where you've got a history, if you go back in time, where deals tended to be, first of all, they were a lot bigger. So you saw lots of mass consolidation and sort of mergers of equals. And then you had the shift towards consumer brands in food, in beauty, and apparel, trying to buy these high growth challenger brands with really fast top line growth, but less of a focus on profitability. We look at what happened last year. We saw Campbell's go and buy Sovos brands. That was a $2.8 billion deal. And I think that's because in food, for example, you're going to see the fact that inflation's not gone completely. The consumers, though, not going to keep putting up with price increases, and the cost base has seen a step function up. organic growth on the margin level and on the top line level has slowed down. So I think that's going to force more M&A, the likes of which we started to see last year again with Campbell. One specific company, I'm going to go out on a limb here and I'm sort of testing the thesis. I look at something, Alex, like Olaplex. Do you remember when that went public? When we were all sitting at home, the valuation on that hair and shampoo company was absolutely astronomical. It's now trading at a fraction, single-digit fraction of where it was. But it's a good cash flow business. It's got a smart backer at Advent, a private equity firm that knows what it's doing. That business, in my opinion, is going to have to go and buy other brands to regain the trust of the public market again. So I would look at that as a potential acquirer. It's got the means to do it. And that's the kind of thesis I find a little bit contrarian and interesting right now.
And talk to us about the private equity and the private credit business. How ready are those two folks willing to commit to M&A here? It would seem like the private equity folks, they've been holding on to a lot of assets a lot longer than they probably would like to, so they have some incentive to get deals done. Are they going to be a player?
Yeah, that's a great point. That's a terrific point. They've got an incentive to get deals done because a lot of deals were done 6 or 7 years ago. So traditional private equity is now a little bit past the horizon to get out of those investments. The other piece of this is, too, if you think about when a deal is done at inception, a lot of leverage is often put on these private companies. And a lot of those debt maturities are coming up. Private equity firms don't necessarily want to recapitalize them with much more expensive debt and be stuck holding them for longer. I think they'd rather sell than deal with that maturity wall. So I think you're going to have a lot of willing sellers. And I do think this, again, is going to be an opportunity where buyers, now that the macro has died down, will start sharpening their pencils, look at the cash balances they've accumulated. And I think we'll start seeing strategics perhaps being a lot more active in buying private equity assets than they were before.
Okay, so I get all of this. But at what point, though, do you need to start looking at yields again? Like if we get a stronger CPI, like your thesis is sound. What if rates hit 5%?
Yeah, look, I think that rates have been expected to be higher for longer, and I think the street's actually been re-underwriting that thesis, Alex, for quite a long time, and I think they sort of got past the point of sticker shock. I think the other piece that I would say when it comes to bond yields and looking at treasuries as the peg is one of my theses coming into this year is the importance of fiscal policy for really dictating what appetite was going to be around a lot of these debt plays. And one thing that's been interesting to me in watching the election, which if anything is going to be one of the big influences in terms of shocks to that thesis, none of the key presidential candidates are coming out right now with much daylight between them on the fiscal policy front, at least nothing concrete, although no shocks or surprises. So I'm just still continuing to think that bond yields, yes, they're important. Yes, that cost of financing is critical. But in terms of catalysts to move markets, I just don't see them at this particular moment.
So, and just as it relates to financing deals here, these rates, they're still by historical standards, these rates are not terribly high, but for the average CEO, CFO, and board member, they feel really high relative to the past decade or here. So how much of a hindrance is that to just getting deals done?
I think it has been a hindrance, but I don't think that it's going to continue to be a hindrance, because one thing that has changed in this narrative is a level of confidence that at some point, yes, inflation will come down and yes, interest rates will come down. Now, what obviously has changed is the pace at which that is going to take place. Do you remember the 6 rate cuts that some of the most aggressive analysts had on the docket for this year? It's now gone to maybe 2, right? So the pace of decline is coming down. But if we look forward not to 2025, but we look to 2026, you can see a deal being negotiated at some point towards the second half of this year. It probably won't close until 2025, by which time we hope some rate action will have taken place. And you can see corporates being a little bit more confident that there'll be a slightly lower interest rate environment when it comes to actually executing against a plan to deliver synergies against. So again, you're absolutely right, higher than recent history, but manageable.
So you mentioned consumer stocks in terms of M&A. Other areas that we've seen, right? We've seen a ton in the biotech space, which we tend to see normally, right? We see energy. We also hear a lot about potential software deals because there's just so many software players, and regional banks. Where do you think is the most likely?
In terms of likely activity, I think we'll continue to see consolidation, Alex, in the Permian, in the oil and gas space, where scale really is critical, and where you've got these absolutely asset-intensive companies. You need to get those benefits of scale. So that's one space I think we'll continue to spend activity. I don't spend a ton of time there. I have in the past, but I do think we'll see activity there. When it comes to software, I think that this is an interesting space. It's still very expensive. But one area that I do think the strategics will start to go shopping a little bit more aggressively is buying some of these private companies backed by venture capital, backed by growth stage equity plans, where valuations are now a bit more sensible. And there are some real buyers of choice out there. When I talk to the private side community in tech, Salesforce is where people want to sell their businesses to. Palo Alto Networks, if you're in cyber. Very healthy balance sheets, lots of free cash flow. And if you look back in history, and McKinsey had a very interesting piece out on it in recent weeks, programmatic M&A, which is lots of acquisitions behind a thesis rather than a really one really big mega merger, has tended to actually generate quite good incremental shareholder returns above the average by about 200 basis points. And so I do think looking at some of those historical M&A machines who know what they're doing on integration will be interesting.
Interesting. Anne, thanks a lot. Really great stuff. Really enjoy it. Have fun at the Eclipse today. Anne Barry, founder, managing partner at Threadneedle. Paul and John, and what's your name again? John Tucker. We'll join you there.
With his welding helmet.
Yeah, he has a welding helmet, apparently, not glasses.
Yeah, that gig didn't work out, but I kept the helmet.
Because you never know when it
You never know.
You never know when you're going to need that welding helmet. I want to see what your garage looks like.
I actually don't have a garage. I have a shed. Yeah,
Okay.
a large shed. And
With
the
welding
basement,
gear.
you can't even move in there. There's so many tools.
With
I got a
old
skill
welding
bag.
gear. All right, Michael Barr now joins us for World and National News. Michael.
Thank you very much, Alex, Paul, and what's his tushy? Former President Donald Trump released a video statement online about his stance on abortion. He says it's now up to the states to do the right thing. The former president says individual states must decide by vote or legislation, or both, the laws on abortion. He did not take a position on when a pregnancy, in a pregnancy, abortion should be banned, but he did say when they should be allowed.
Like Ronald Reagan, I am strongly in favor of exceptions for rape, incest, and life of the mother.
Trump also says he supports fertility treatments for all who need them. President Biden will announce a new major student loan forgiveness plan today that could help about 26 million Americans. There are currently about 43 million Americans who have some form of student loan debt. This is the latest push by the Biden administration to make good on a 2020 campaign promise by the president after another big effort was blocked by the Supreme Court last year. It's the countdown to the total solar eclipse. It is set to begin after 2 p.m. Bloomberg's Ed Baxter reports.
The several minutes of daytime darkness will follow a path up through Mexico, the U.S., and into Canada, depending on where you are, 3 to 4 minutes. For some, an economic bonanza. And one of those places, the northeast of the U.S. New York Governor Kathy Hochul says, along with all the glory, though,
we are warning everyone. The roads can only handle so much. And we're expecting a high volume of traffic before and after the event.
and of course the perfunctory warning by now, don't look at the sun without the correct protection. Ed Baxter, Bloomberg Radio.
Actor Jonathan Majors has been sentenced to probation. Majors was before a judge in New York City after he was convicted in December of assaulting his ex-girlfriend. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, as traders scale back their bets on the number of Fed rate cuts this year, Treasury yields are higher. Major stock averages, they are up right now. They were a little changed before. 7 of the 11 major industry groups in the S&P 500 up. Consumer discretionary, that's in the lead right now. And, of course, that's home to Tesla. Those shares up around 4%. Big data week and earnings season starting in earnest on Friday. Jack Manley at JP Morgan Investment has latched onto Wednesday's Consumer Price Index as an important driver of stocks.
Inflation is probably the most important thing to be paying attention to. At least that's how the market's going to interpret it. I don't think any individual inflation report sways the Fed's narrative, but inflation will kind of further this story that the economy is doing pretty well.
And Blackstone striking a roughly $10 billion deal for an apartment landlord, apartment income REIT, also known as Air Communities. This is the latest sign that the real estate investor sees a right moment to start pouring money into the property market. Right now, the S&P 500 is up 12 points, up 0.2%, 52.15 on the index. The Dow Jones Industrial Average up 65 points. NASDAQ 100 up 48 points. 2-year yields 2 basis points higher, 4.77. The 10-year, that's up 1 basis point. That's at 4.41. And I'm trying to look for the MSNBC total eclipse countdown clock for Alex. I think it was like at 4 hours, 27 minutes.
There's something here. It is.
Oh,
3 hours,
45 minutes,
55
55, 54, 53 seconds. That's for you.
Thank you. And the CNN has a countdown to their 12 o'clock special on the eclipse. Just
no, we want to, we're
just
counting
so we're
down
clear.
to your special
moment. I'm Alex Steele, here with Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We are broadcasting live from the Interactive Broker Studio right here in Midtown Manhattan. We are also broadcasting live on YouTube. We cover all the top themes with all our top analysts all around the world. They cover about 2,000 companies and 130 industries. They're probably all also going to be watching the eclipse. Joining us now, George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. We'll get to the main topic in a sec, but are you watching the eclipse in Princeton?
Of course, I'm the aerospace guy, right? I'm always looking at the sky.
And that is a fair and excellent point.
Yes.
Before then, though, I'm sure you're going to be writing and talking about Southwest and Boeing. Both stocks are up, but they were down in pre-market. The FAA announcing it was investigating an incident where the engine cowling, I don't really know what that is, of a Boeing plane fell off during takeoff. What do we know?
Well, I mean, it's an engine cowling, right? So the cowling is what covers different components of the engine. It's all designed to be removed when you maintain the aircraft. This airplane, as I understand it, was a 2015 build, so it's been in service for, what, 8+, maybe 9 years. This, I think, is going to be chalked up to some sort of maintenance challenge at Southwest. Somebody must have either overlooked fasteners or overlooked wear and tear on the cowling. It probably didn't put anybody, at risk. I think the biggest risk probably was when the cowling fell away, it could damage another part of the airplane. Doesn't necessarily need to be on to fly. Not going to be the most efficient. But I think it's a sign that we're seeing all over aerospace, and that is big turnover in the talent pool and things like, when you're maintaining an engine, making sure the cowling is serviceable and mounted correctly, some of that stuff is getting missed, and that's not a good sign, but again, I don't think life-threatening in this case.
Hey, George, just looking at another story here. Spirit Airlines, we all know that, blocked the Spirit Airlines merger with JetBlue a few months ago was blocked on antitrust concerns. Now Spirit's coming back and saying, hey, we don't necessarily want to take the planes we ordered. Can we defer that? Can we furlough some pilots? I mean, it seems like they're trying, the fact that they can't get a merger done, they're just trying to cut costs to survive. Is that what's going on here?
Yeah, I think so. And I think this is probably, maybe the more interesting from a market's perspective story. So Spirit definitely in cash conservation mode. And this sounds like an effort to continue to conserve cash, I guess, or to improve cash conservation. But look, I think if they looked at the U.S. airline market and thought there were lots of opportunities to fly to plenty of places and make money on those flights, they would have been willing to take those airplanes because they could take those airplanes, lease them, and have little to no cash out the door, but add to their route network. And so my sense on this is that, again, when they're looking at the landscape of where they can fly right now, they're saying, hey, you know, there's just the routes we're adding, we're not making much money on, and so maybe not making any money at all. And so it doesn't really, there's no value in us taking these airplanes and flying those routes. Let's defer these back to Airbus and shrink our network a bit, or shrink our network growth, and see if we can make more money off our core network, because we just don't see the opportunities. I think another part of this story is Airbus has been out talking to their customers, trying to pull together A321s for United. I think they'd really like a conquest there, where United earlier said, hey, we don't know when Boeing's going to get the 737-10 certified. We're not going to wait around. We'd love to do an Airbus order. And I think this is part of Airbus going out, beating the bushes a bit, finding out what airlines are willing to give up some of their slots. Spirit going, hey, we're willing to walk away from some because we don't see the opportunity. And some of those planes may end up at United and help them cement a United order. So I think it has deeper discussion, deeper implications in the market. Sorry.
Well, that's quite interesting. I hadn't thought of it along those lines. So what else do you think that Spirit is going to be doing here? So part of it, obviously strategic, part of it's just like conserving cash, but there's a lot of layers to it. What other stuff can they do?
Look, I think for Spirit right now, it is all just about really conserving cash as much as they can, and then working with the bondholders that have that bond outstanding that's backed by their loyalty program, and figuring out, I think they're never going to find enough money to pay that off, but they want to go into those discussions with as much cash as possible to maybe engage those bondholders to take some portion of face, maybe now when they refinance it, and roll the rest of that bond. It's like a $1.1 billion bond. Roll the rest of that bond out over time so that they can, that essentially doesn't push them into some sort of default or bankruptcy situation.
Hey, George, from the airline's perspective, what are we seeing these days just in terms of bookings here? I'm thinking folks are starting to book summer travel, that type of thing. What are we seeing here?
Yeah, so we don't know. That's going to be the big question, right? We're getting ready to go into earnings season. Yep. Delta reports on Wednesday. We'll be listening very closely to what their forward bookings are. Delta's not going to give us a great perspective because Delta's still that full-service carrier. Right. We think the premium business is still doing better than the budget business. We know, again, Spirit's in the budget business. That's why I think they looked at their opportunity set and they said, hey, maybe we don't want those airplanes right now. So Delta will provide a little bit of insight. But, we already know from the guidance we've seen for 1Q's not going to be a great quarter. Wages are going to absorb a lot of potential profitability in the quarter. Fuel gave a little bit of a tailwind. We haven't seen a huge number of adjustments for the quarter, so we're still kind of thinking largely a loss, especially at low-cost airlines, maybe not at the full service. So really this business is going to come down to 2Q and 3Q. I think it's become a lot more leisure-driven, right? And so when we get those heavy leisure traffic periods, like the summer vacation period, and we just coming through spring break period, some of which fell into 2Q, we're going to really watch very closely their profitability outlook and their profitability, because it seems like a lot more of their year is going to be wrapped up in 2Q and 3Q as we're still waiting for business to come back all the way.
Oh, well, clearly George is coming back on Wednesday, so there is that. Before we let you go, are there special glasses that pilots have to wear for the eclipse if they're flying a plane?
So I don't think so. I think we should just tell all pilots watching, don't stare at the sun.
Right. Or maybe they have like a welding helmet.
I'm thinking back to the movie Airplane.
Oh, yes.
Where he's wearing blind glasses.
Airplane classic. Love that movie.
Yeah.
Don't call me Shirley. Okay, George, thanks a lot. Really appreciate it. George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. I don't know, what do they have to look near the sun? Don't they have to wear different glasses?
I think that's an issue. That's a valid question. I hadn't thought of that. That was really good.
Well, good. I'm glad I can help in some respects when it comes to the eclipse. Okay, markets pretty much going nowhere. We got the S&P up by about 0.2%. Volume is mixed. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. We'll look at some of the company stories we're following for you. Tesla headed for its highest profile trial yet over a crash blamed on autopilot. That's the driver assistance system Elon Musk has billed as critical to his pursuit of self-driving cars. The electric vehicle maker prevailing in 2 previous trials in California after juries found the accidents, one fatal and one not, were due to driver error rather than the company's technology. Each of those trials, and more that are scheduled in coming months in California and Florida, clash with Musk's mantra that Teslas are the safest cars ever made. David Ellison, movie producer, tennis fanatic, and heir to a technology fortune, on the verge of adding another title, media mogul. Ellison is in negotiations to take charge of Paramount Global. That's the media giant that owns CBS, MTV, and Nickelodeon. He and his backers have agreed to pay a little more than $2 billion for Sherry Redstone's National Amusements. That's the family company that controls Paramount. But the deal won't close until Ellison can merge his production company, Skydance Media, with Paramount, and a number of other hurdles stand in his way. And Target is taking a new tack to combat theft. They're adding new technology at the self-checkout registers that uses cameras to detect items on scanners, or alerting shoppers who leave anything unscanned. Shoppers are going to get audio and visual cues when they don't scan the items. And I can tell you from my own experience, not at the Wawa, but the Quick Check, they use automatic scanners for checkout. They don't have cashiers. More often than not, in the middle of the night, when I scan the coffee cup, it doesn't come up, and the woman in the back says, just take it.
I love that for you.
Yeah, so it's working out really well. Not stealing. That's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Monday, everybody. Happy Solar Eclipse Day. I'm Alex Steele alongside Paul Sweeney. We are live in our Interactive Broker studio right here in Midtown Manhattan. We're also streaming for you on YouTube. We bring you all the news with all our top analysts from Bloomberg Intelligence. They cover 2,000 companies and 130 industries all around the world. We also bring you Michael Barr for world and national news. Michael.
Thank you very much, Alex, Paul, John. Many Americans will get the chance to see a total solar eclipse today. Even if you're not directly in that path of totality, scientists say about 99% of Americans across the country will witness something today, including a partial eclipse. Dr. Jedediah Eisler, astrophysicist and National Geographic explorer, with a note concerning the eclipse of 2017.
One cool difference between the 2017 eclipse and the one that we're going to see now is that the moon is closer to the Earth, so it's going to cast a larger shadow. So both totality will be longer, and the actual path will be almost double what it was in 2017.
The eclipse will start after 2 p.m. Salvage crews have begun removing containers from the deck of the cargo ship that crashed into and collapsed the Francis Scott Key Bridge in Baltimore. It's an important step toward the full reopening of one of the nation's main shipping lanes. The Dolly has been trapped in the river since it slammed into the bridge on March 26th, killing 6 workers. Former President Donald Trump said states should set limits on abortion instead of calling for a ban at any stage. He said in a video posted on Truth Social, saying many states will be different, and at the end of the day, it's all about the will of the people. The presumptive Republican presidential nominee also says he supports IVF.
Today, I'm pleased that the Alabama legislature has acted very quickly and passed legislation that preserves the availability of IVF in Alabama. They really did a great and fast job.
The announcement comes as Trump and his campaign try to neutralize the party's stance on reproductive rights heading into the general election. Actor Jonathan Majors was sentenced this morning to probation but avoided jail time for assaulting his ex-girlfriend in a high-profile case that derailed his once promising career. Majors had faced up to a year behind bars after he was convicted of misdemeanor assault by a Manhattan jury in December. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, thank you so much, Michael Barr. Here is a headline that will make every single listener happy and joyful. Ivy League college costs soar to more than $90,000 a year. And that's including room and board, so there is that. But UPenn kind of tops the list, $92,288.
Nice. And it's, the headline's misleading because it's, top colleges in general in this country are all at that level, or many at that level, including
yes,
my last offspring, 404, is a freshman in college, and it's darn near that number, right? It starts with an 8, and it's just extraordinary. So it's just, I'll be down at Duke University this Friday for the board meeting, and I will make the point, as I always do, this whole model is absolutely broken.
It's insane.
It's just broken. It doesn't work. And you look around at all the expenses and all the investments that go on in a lot of these schools. It's no wonder.
So there's a couple of caveats. Every school, and they say this in the article. For example, UPenn, we brought up students whose families make $75,000 or less with typical assets. I don't really know what typical assets mean. Will now receive financial aid packages that cover tuition, fees, housing, and dining. So there is that point, right? You also have President Biden out today talking about different loan forgiveness, really about the interest payments, not the actual loan, but the interest payments. But net, actually doing something about this in a more meaningful way, I don't know how you do that.
I think one of the things is you provide greater incentive for trade schools.
Because
businesses tell us all the time that they don't have enough welders, plumbers, or whatever, technicians in general, just trades.
Or people to put cowlings on aircraft.
Yes, cowlings on aircraft. You provide incentive for those folks, and then they graduate without the crippling student debt and with a marketable and valuable skill. I don't know how you get that done.
I mean, think if John Tucker had gone to welding school.
Exactly.
His life would be very different right now, and maybe not in a worse way. Probably in a little better way. It's true, but you'd have a better welding thing. Anyway, much more coming up in the second hour of Bloomberg Intelligence. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Julie Fine, Bloomberg Texas Bureau Chief, on the North America solar eclipse. I think they're definitely down there in Texas going to get a good view, assuming the skies are clear. Damian Sassower, Bloomberg Intelligence Chief Emerging Market Fixed Income Strategist. I can't wait to see what kind of emerging market he tries to sell me today. Walter Todd, President, Chief Investment Officer, and Managing Director at Greenwood Capital, with his market call here. And then we're also going to take a look at the EV business and what's happening there with the charging companies. A lot of folks say they're not buying any EV until there's many charging stations as there are gas stations. I hear that quite a bit. All right, let's kick everything off this hour with Mr. John Tucker. John, what do you have for us?
All right, Alex and Paul, stocks higher after Friday's rally. Treasury prices, they're falling across the curve right now. You have traders' conviction on 3/4-point rate cuts from the Federal Reserve this year, so that's quickly dissipating. Markets now favoring just 2 reductions. And Jack Caffrey at J.P. Morgan Chase actually worried right now about how the stock market gains have been broadening out.
We are starting to see that broader market. The challenge, though, is what's underpinned the market so far has been this belief, if you will, the year of the bonds coming back, the sense that inflation is going to be slayed, and yet sectors that are sensitive to, if not actual causes of inflation, are in leadership.
Well, splashy events have long been part of Tesla's strategy to generate buzz, and the latest, Elon Musk announcing he's going to unveil a Tesla robo-taxi in August. Shares up over 4%. As we look at the overall market, S&P 500 right now, 11 points higher. That's up 0.2%. 52.15 on the index. The Dow Jones Industrial Average up 59 points. That's a rise of 0.2%. The NASDAQ 100 right now up 47 points. That is up 0.25%. So the most direct beneficiaries for the eclipse, providers of accommodation. According to Airbnb, there was a 1,000% increase in searches for stays along the solar eclipse path of totality. So they're like solar eclipse related stocks.
There are definitely related plays. Like, I appreciate that. Like the
Okay.
solar
I'm just
outage
saying.
stuff. I like the Bloomberg. I like the Bloomberg angles. But how bummed would you be if you traveled, spent all that money on Airbnbs, and then
whatever.
it was cloudy?
Anyway, we're brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. And we check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Bull.
All right, John Tucker, thank you very much. I'm Alex Steele alongside Paul Sweeney. If you're just joining us at the top of this hour, I'm eclipsed out. I think that's the takeaway. There have been so many segments on so many different angles that I don't know. I'm a little over it at this point. But I say that I'm also going to be on TV during the eclipse, so I don't get the benefit. Anyway, stocks not doing much, but some individual stocks are nicely moving. GE of Renova getting its first upgrade. This is kind of interesting. Norma Linda joins us to break it down. Nora, what do you got?
Yes, as you mentioned, it did receive its first upgrade. This is coming from JP Morgan. It upgraded it to buy from hold.
So this is, what is GE? Oh, this is
This is that spinoff that we're looking at.
GE Vernova, ticker symbol GEV as in Victor.
Exactly, and as we know, this is General Electric's clean energy spinoff, and of course, it just recently came into public trading. But it's really interesting here as it's getting its first upgrade. Still a newbie here in the space, but we're watching it as one of the biggest gainers in the S&P 500 right now.
Yeah, I mean, it's basically a power company. Like that's where you want to be betting. You might say
35 billion market cap. Okay.
For data centers, you know how it goes. All right, you're also taking a look at AIRC. This is the Blackstone thing, right?
Yes, the big news of the day that Blackstone has agreed to buy AIRC, Apartment Income REIT, for $39.12 per share. And this is a really pretty big deal here. I want to say about $10 billion deal, all cash deal. And as it's kind of just putting a bet here on residential spaces, and as we are seeing a lot of its peers rising, like Mid-America Apartments and a lot of other names here.
All right, and last up, you're watching Kroger. I love Kroger. I think Kroger's so interesting. What do you got there?
See, do we have Kroger up here? Do we have Kroger here?
No, I don't believe so.
Okay, because that's a Virginia name for me.
Yeah, that's a Virginia
I
name
love
for me,
Kroger. It was either Walmart or Kroger. I used to go to Kroger. But we are seeing Kroger shares down a little bit after Exane downgraded the stock to underperform from neutral on a cautious U.S. grocer view. So they are kind of becoming cautious on these names, and it sucks that Kroger happens to be hit by it.
Yeah.
Kroger's up 23% year to date, so, I mean, even after this pullback, so.
It already had a nice move.
Yeah.
Yeah. All right, Norm, thanks a lot. Super appreciate Norma Linda breaking it down for us for Bloomberg News. All right, well, let's go to someone who's probably not eclipsed out yet, and that is Julie Fine. She's Bloomberg Texas Bureau Chief, and she's standing by. I mean, it's not that I don't think it's cool. It's a lot. It's a lot. Are you eclipsed out?
I'm getting eclipsed out. Yesterday I was in Target and I was like in the line for self-checkout for like 20 minutes. It's just so crowded here. I think you think about a Super Bowl when, you know, a stadium holds roughly 100,000 people. So you probably have 200,000 people in town. Right now in the Dallas area, the mayor estimates 400,000 people in town.
So people are coming there because Dallas is in the totality area? Is that the story?
Dallas is totality. We get
Nice.
totality for 3 minutes and 51 seconds, to be exact. So Dallas is in totality. So we have a lot of people in town, and you can certainly feel it.
To be fair, I mean, I may joke, but there's a definite economic impact here. Like, how much could Texas make off of this thing?
A leading economist estimates over $400 million for the entire state, because there's areas that are in almost totality, like Austin and Houston. You've got the Hill Country. I mean, hotels are jammed. My family said to me on Friday, we should try to come in for the eclipse, and you're looking at, to even get here was $1,200 on Sunday.
Oh, my God.
Well, Governor
I said,
Hochul
this is a little late to think about that.
Exactly. Well, Governor Hochul, Governor Hochul for the state of New York is telling people, like, because another one is up in Buffalo and Niagara Falls.
Well, fun fact, that's where I'm from. So I'm all eclipsed today. And in Buffalo, it's supposed to be better forecast, actually, than here in Dallas. We're a little overcast here. But Buffalo apparently is jammed with people as well.
It is actually quite interesting. If you look at like an Airbnb map, this came out on X like a few weeks ago, I guess, and you just saw exactly where the line was of where the eclipse was going to go, sold out Airbnbs. So to your point. All right, Julie, what else are you going to be watching? Kind of what are some of the highlights here?
Well, I think there was some questions about the power grid because solar will be affected for a short period of time, but the power grid in Texas seems very prepared to handle that. So we'll be watching that. You know, our office is smack in the middle of downtown, so they're actually blocking entrances and exits for an hour or so. What's really interesting is we're supposed to have severe weather this evening. So obviously everybody will be paying attention to that. It'll be really interesting, and actually, you know, hopefully people are smart about when they choose to travel and come in and out of town if there's a horrible rainstorm and everybody's kind of trying to get out of Dallas.
Big D. They do things big in Texas.
That sounds fun.
Everything's bigger here and better.
All right, yeah, I do think that the solar thing is also kind of interesting. But again, if you're prepped for it, maybe it's not that big of a deal. All right, Julie, thank you so much. Have fun. Be safe. Julie Fine, Bloomberg, Texas Bureau Chief, joining us there. Hard pivot, China. So Janet Yellen, Treasury Secretary, had a recent trip to China. There were many things that she discussed with her counterparts. She implored Beijing's top leaders, apparently, to fundamentally rethink their economic growth strategy. This was a pretty high-stake trip to China, strengthen bilateral ties, also deliver critique, and also sort of discuss Taiwan in the background. There's a lot happening on this front. So let's get to our emerging market expert guy, Damian Sassower, Bloomberg Intelligence Chief EM Fixed Income Strategist. Anything that stood out to you, Damian, in terms of Janet Yellen's trip?
Well, I hear that she really knows how to eat with chopsticks, because that got a lot of coverage. Locals in China talking about how well Janet Yellen eats with chopsticks. That's a fact. But no, seriously, I think look, I mean, China's flooding the world with cheap goods. This is nothing new. This is a lot of kind of jawboning ahead of the elections. This might actually be the last time Janet Yellen does ever visit Beijing as, you know, or Guangzhou as Secretary of the Treasury. But look, I mean, this is a big data week in China. We've got inflation data coming up on Thursday. I mean, China's in deflation and it's exporting it to the rest of the world. We've got export data coming at the end of the week. It's going to be weaker despite the fact that we had some strong PMIs last week. I mean, China's still one of the lowest yielding economies in the world, and its currency and its bond markets are feeling the pain of that.
So when you're on the phone with your emerging market and your clients and the discussion comes around to China, are they buying them or are they selling them?
I think, quite frankly, it depends on who you're talking to, but I think from a investment standpoint, from a U.S. foreign investment standpoint, people are using the China yuan as a funding currency. So they're using it to take risk.
So what
in
does
other
that mean?
economies.
They borrow?
So yeah, they're basically short yuan versus being long dollars or anything else, basically. Right. And it's not just China. I mean, let's not just bash on China here. It's all Asian economies for that matter. I mean, all the low yielders, Thailand, Taiwan come to mind. Even the Japanese yen, as we know. I mean, those are funding currencies. I mean, anything denominated in those four currencies are up on the year.
I don't want to be labeled a funding currency, do I?
No, well, I guess not.
It doesn't sound right.
But
you want a weaker currency actively, right?
Well, I mean, think about it from a fixed income perspective, right? I mean, lower yields. I mean, look, if yields do follow your currency, then that would be good for bonds, right? I mean, yield should come down if your currency's offering less, and bonds should rally in that type of a market. But a lot of people aren't willing to fund the problems that China's financial markets currently have, especially U.S. investors. So it's kind of a hard sell there. But look, I mean, again, you're right to point out what's going on with not just the U.S. and China, but China and Taiwan. We've got some big meetings. I think President Xi's meeting with the former president of Taiwan this week, which could be a good or a bad thing depending on how markets perceive that. But yeah, it's certainly a lot of I guess political kind of uncertainty being thrust into the faces of investors in China.
Okay, but back to do you want to be a funding currency? It's not usual that the yuan is a funding currency, right? Like this seems to me to be an odd occurrence.
Yeah, so I would say about a year ago, if you watch the forward strip in foreign exchange,
which we all do,
as one does,
right? As one does, it went from positively sloped to negatively sloped, and it's been that way ever since. So when I say you have a negatively sloped forward strip, it means that markets are pricing in tighter interest rate differentials between China and the U.S. going forward. In fact, at 219 basis points, that's the 10-year China-U.S. yield differential. It's at pretty much the lowest on record, and the correlation between that spread and dollar yuan is as tight as I pretty much have ever seen it in my career. So, we now have at 229, the 10-year in China at really, quite frankly, the lowest level you've ever seen on record. And dollar yuan spreads are, trading off the back of that, and dollar yuan is trading off the back of that, and it's pretty much a recipe for disaster.
All right, so you didn't sell me on any Chinese yuan. What are you going to sell me on today?
Oh, man. I mean, we have some inflation data coming out of...
I am flush with dollars here, as you can see.
So
he does. He carries dollars around his pocket.
I think the other Asian central banks, like the Philippines and Taiwan, I know South Korea, who are meeting this week, are probably going to err on the side of being a little bit more hawkish than you would otherwise believe. I don't think the markets are priced for that. So Philippine peso, Korean won kind of come to mind as places you may want to hang your hat here. And we also get a lot of inflation data out of Latin America, Brazil, Mexico, and Peru. Those economies have been cutting rates fairly aggressively. We may see a bit of a hawkish pivot there again. The markets are probably not entirely priced for that. So that's what we're looking at in emerging markets.
How do you look at the election, by the way?
Which one?
The
Slovak election? We're talking about Slovakia here, about Pellegrino.
Right?
Okay.
No, we're talking about the U.S. presidential election
Yes.
in terms of what it winds up meaning for emerging markets. I was also really struck. Joe Weisenthal had a nice chart out that talked about how our biggest importer now is actually Mexico, not China.
Or Canada, one or the other. I mean, they're vying
right.
for that, yeah.
So I just wonder sort of how you calculate things like tariffs increased on China under President Trump, and not necessarily anything radically different from President Biden either, but how do you think about that when it comes to evaluating emerging market debt?
Well, I mean, we were talking about the fact that, you know, as we move into this election, that trade risk is going to be just a much bigger part of the equation. I think everyone is really calling for that. So at this point, I think you almost want to fade that. You know, the fact is, you know, as we kind of get closer to the election, you know, and everyone's basically going to jawbone China down, just how far is the U.S., the current administration, willing to go to really bash on China? You know, obviously they're sanctioning new industries, EVs, solar, new companies that are supposedly, I mean, they just announced today they're threatening that the big policy banks in China, anyone who's doing business with Russia, you're on notice. So, you know, you've got a lot of that jawboning, but to actually put that and implement that is going to be a different story. I kind of would be fading that a little bit as we get into the end of the elections, but, you know, I mean, we're talking about Donald Trump here, so I wouldn't fade him. So yeah, I guess that's the way I'm looking at it. I think there's other election-related risk. I think of Claudia Sheinbaum in Mexico. I think of, you know, India, which is coming up here, some elections there that really kind of capture the attention.
So am I long Mexico still?
I think so. I mean, 10.5%, 10.75% policy
Am I going to
yields.
get paid back?
Plenty of cushion there if things go the other way, right?
Okay.
I mean, so look, I mean, what I'm saying there is even if the peso depreciates relative to the dollar, as a U.S. investor, you're still getting 600-700 basis points of carry cushion over, you know, U.S. interest rates here, you know, here locally. So, you know, there's a lot of cushion there, a lot of premium that you can kind of extract if you have the ability to take
How
that
is the
risk.
Mexican economy broadly defined? Is it
Surprising to the upside. I mean, look, I mean, absolutely. I mean, I don't want to say it's been a dumping ground for a lot of these China exports, but it has, right? And certainly a lot of people the friendshoring theme is real. I mean, from anyone who I speak to, you know, a lot of people are setting up shop in Mexico. A lot of other industries where they had maybe, you know, factories and manufacturing facilities in Asia, they're trying to push it back into Mexico. So Mexico is an unwitting beneficiary. And I think to Alex's point, together with Canada, they're going to comprise a much bigger part of the U.S. Trade equation. So you got to keep an eye on them.
In terms of, you mentioned an election, though, in Mexico, what's going on there?
Right, so Claudia Sheinbaum of Morena, she is AMLO's sort of constituent. That's sort of the continuity trade. She is definitely the favorite to win it all. She is, it's interesting because there is some stuff going on between Mexico and Ecuador. I don't know if you caught this overnight, where basically Ecuador expunged the Mexican embassy out of there because they were kind of holding the former vice president, this guy Gass, who was doing business with Odebrecht. Kind of, he was in asylum. I don't know, whatever. Not to get into it, but the long short of it is,
You got that? You got that?
there's
Right,
a lot of
thing.
sort of stuff going on between Mexico and its Latin American partners, like Ecuador, and I think that's going to capture a bit of the attention as we head into the elections this year. It's something, you know, we can't, you know, shake a stick at Guillermo Lasso, you know, El Salvador, some of this populist sort of rhetoric that we're seeing in some of the smaller Central and Latin American countries, you know, South American countries are really starting to come to the fore here. So something to be mindful of.
30 seconds on Brazil.
Brazil inflation data this week is actually supposed to ease up a bit, which should give, you know, it should give Brazil the ability to cut the Selic rate that much further. They cut by 50 basis points just a few weeks back. I expect probably another cut or two coming up. But again, all eyes are on the Fed here, you know. And with June being pushed out to September, it's difficult to ascertain how any central bank's going to react in this economy. I mean, Brazil is a little bit of a beast unto itself, but yeah, I could see it being a little bit more dovish than you would otherwise expect.
You know what we have to get Damien on and just like rapid fire countries at
Yes,
him for like
exactly.
20 minutes and just, you won't know the difference.
No.
And we'll just hear all the things that he says. Are you watching the eclipse later?
I don't have glasses.
So
I thought that we would be handing out glasses here at Bloomberg.
Whoa.
Well, I mean, right?
Yeah,
I don't
maybe
know.
you can go up to the 6th floor. That'll be instead of our little snack.
I heard your skin bubbles when you look up at the sky.
You get skin bubbles? What? He's just making that up.
NASA TV. That's a
That's
great
not a
way to
thing.
watch it. There is NASA TV.
Although to be fair, like you probably don't want all that. Anyway, you're not getting blisters on your face. All right, Damien, thanks a lot. Damien Sassower from Bloomberg Intelligence. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major averages, they've been fluctuating. Right now, they're slightly higher. Investors trying to balance an optimistic outlook for the economy and corporate earnings against mounting concerns the Fed's going to delay rate cuts. The betting right now has gone from 3 this year to just 2. 6 of the 11 major industry groups in the S&P 500, they are higher right now, being led by consumer discretionary. And that's where you're going to find shares of Tesla. Tesla shares up about 5.5%. Meantime, J.P. Morgan CEO Jamie Dimon says artificial intelligence may be the biggest issue his bank is grappling with, likening its potential impact to that of the steam engine, and also saying technology could augment virtually every job. The S&P 500, 10 points higher right now. That's up 0.2%. We're at 15 on the index. The Dow Jones Industrial Average, 63 points higher, and the Nasdaq 100 right now, that's up 42 points. That's a rise of 0.2%. Treasury prices are lower as we reprice Fed rate cut bets. 2-year yield, 2 basis points higher. That's at 4.77. And 10-year also declining in price, pushing the yield up 3 basis points there. That's at 4.43. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's Bloomberg Business Flash. Alex and Paul.
All right, very good, John Tucker. Thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. Again, we think about where we were back in October to where we are now. S&P 500 up over 25%. Just a big move. Big first quarter as well to kind of finish that off. And we got a little bit more green here today. So the question for a lot of folks is, boy, that was quick, and did I miss that move in the market? Let's check in with Walter Todd. He does this stuff for a living. He's a president, chief investment officer, managing director at Greenwood Capital. And Walter, I'm guessing you're in South Carolina?
I am. I've got my Eclipse glasses ready for the for the viewing later today.
And I'm guessing you're pretty happy after your Lady Gamecocks last night put on a heck of a show.
Yeah, congratulations. Got to give a shout out to Dawn Staley and the team for a great win, undefeated season. Pretty incredible.
Yes, amazing. All right, Walter, what are you telling your clients here about kind of these markets, where they've moved, where the opportunities are? What are you talking? What are you saying to your clients these days?
Yeah, well, as you kind of alluded to in the lead-in here, it's been quite a move off the lows, and it's this year's been a little bit hard to figure out, quite honestly, for me. I mean, the move off the lows in October when rates peaked at 5 and the S&P started to rise as rates fell, that made a lot of sense. But as we sit here today, up almost 10% for the first quarter for the S&P, rates have risen. The expectation for Fed cuts has gone from 7 to less than 3. So it's a little bit puzzling to see the market kind of screaming in that with that backdrop. Having said that, the reason for the rate cut push out is because economic data has been better, and that should be good for earnings. I think, depending on your time horizon, in the very short term, it feels like this market's a little bit tired, kind of churning here. We're seeing some rotation underneath the surface. So I think you can kind of bide your time a little bit here and look for opportunities in the volatility that we think will come. But again, it reminds me of the quote from Mark Twain. It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so.
Yeah, and Walter, that really depends on the volatility actually materializing. What does that volatility look like, and what do you think finally causes that?
Yeah, well, I think we got a little bit of a peek at that last week. If you look at the action on Thursday, from the comments from Kashkari Thursday afternoon, and then the geopolitical issues going on in the Middle East, you saw the market drop 2% basically from high to low in a couple of hours. So that's, I think, a little snapshot of what could happen. I mean, we'll see what happens with the CPI report on Wednesday. If that were to come out a little bit hot, we could see some more volatility. But you're right. I mean, it's been incredibly low volatility backdrop for markets, really off the lows from last October. So there's no guarantee that it will emerge, but I think the odds are that it likely will, as a function of probably higher rates being the catalyst there.
Walter, what are you guys doing in the fixed income space here? I mean, I can just park myself for a 2-year treasury and get 4.78%. That's not too bad.
Yeah, absolutely. I mean, I think on the fixed income side, when we have managed a good number of fixed income assets, I mean, we take a barbell approach on that. As you say, taking advantage of the short end, but also taking advantage of rates moving higher and starting to step out a little bit on the duration spectrum, but still staying shorter than the index. The other aspect of fixed income is corporate spreads. Those are extremely tight right now, and kind of back to the previous point about where's the volatility going to come from. You really haven't seen, anytime you've seen volatility in the equity market, the little that we've seen, you really haven't seen spreads react. And so we're kind of watching that to see it kind of as a coincident indicator to validate any type of sell-off maybe has some legs on the corporate bond market. So we're actually transitioning a little bit of weight out of corporates into treasuries as a result of those tight spreads.
Yeah, you know, you and everybody else have been waiting for those spreads to change. It's really fascinating. Do you think we see for the 10-year 3% or 5% first?
That's a great question. I think we could see a push back towards 5%. You know, in that direction, whether we clip it or not, and get back to those highs from October. I'm not sure, but I think directionally we're going to move towards 5% before we head back below 4 and maybe head towards 3 as we move through this year. Because the other dynamic here is the federal government just continues to run deficits and spend, you know, have deficit spending, which has really kind of been the support for financial markets in the economy. If you look over the past several years, we've been running, you know, 5% deficits year after year, which is, you know, certainly helpful to the economic environment and financial conditions.
So on the equity side here, where are you seeing opportunities here? Are you kind of all in with some of those big growth stocks that have been powering the market really for the last 18 months, you know, the NVIDIAs of the world, or are you looking for maybe some value in other spots?
Yeah, for us, it's kind of a barbell. So we certainly have exposure to, you know, technology, not NVIDIA specifically, but other technology names within the index, because that is, I think, a multi-year kind of growth dynamic with AI, but probably getting a little bit stretched here in the short term. On the flip side, we also see opportunities and want to have some exposure to the value side of the equation. So think energy, materials, industrials. And that's something we've really seen over the past month is kind of this emerging inflation trade, where you've seen, you know, the commodities kind of catch a bid here. Industrials have been consistently good, particularly down the cap scale. So we believe you want to have a balance within the portfolio between the growth and the value.
You mentioned energy, thank you very much. So how do you want to play that? Like, what's the best way to play the recent outperformance?
Yeah, Alex, I know you're a big energy fan there and follower and expert. So within the portfolio, we have you know, a variety of different exposures there. So certainly on the E&P front, I think this M&A that we've seen over the past year is going to continue as we move through the rest of this year and into 2025. We also have exposures to some of the big integrated names like Exxon and Chevron and different strategies. We don't have a ton of exposure to the equipment and service space right now, but I know that's been catching up a little bit to the broader energy space. So we think having a broad exposure within energy and quite frankly, you know, it's just 4% of the S&P. So you can have, you know, a pretty good overweight with just 6 to 7% of the portfolio in there. And we still think this dynamic of, you know, NVIDIA, for example, being larger than the entire energy space, just doesn't make a whole lot of common sense to us. So we think there are opportunities in the energy space.
How about in healthcare? A lot of folks are suggesting that could be a defensive area, but still some growth, I guess.
Yeah, healthcare has been disappointing. It's certainly disappointing. You know, it was great in 2022 when the market was off. It was, you know, lagged last year. Started to kind of emerge early this year, but has fallen back off. We see a lot of value within healthcare. You know, whether that be pharmaceuticals, biotech, healthcare equipment, but certainly has lagged the overall market. But we definitely have a healthy weight within that sector and see opportunities. One of the challenges for healthcare is it is an election year, which tends to be a little bit of a headwind for those names.
What don't you like right now? Like, what's like verboten where you are?
Yeah, so we're underweight consumer discretionary right now. We're underweight you know, real estate and utilities as interest rate sensitive sectors. And we're actually slightly underweight technology, which I know is it seems like a crazy thing right now. But again, we think a little bit stretched here in the short term, given the move that we've seen you know, over the past 18 months in that sector.
Yeah, that's so funny. It's like you don't want it, but you have to have it, but it's stretched. That's a tricky spot, definitely, to be.
Yep.
That's why people get paid to do this stuff.
That's true. That's why I don't do that.
Walter Todd, thank you so much for joining us here. President, Chief Investment Officer, Managing Director, Greenwood Capital, coming to us from the great state of South Carolina, and Greenwood, South Carolina, where I guess the whole state's going nuts. I know Amy Morris is at Bloomberg News down in Washington. We chatted with her this morning. She was overcome with emotion talking about her University of South Carolina.
Sports?
Lady Gamecocks. women's basketball.
Yeah, no, I'm kidding. I do know. Paul's looking at me like, come on, Alex. Like, get it a little bit together. I got it a little bit together for that.
Got a little bit together. Yeah, so that was a lot of fun for those folks down there.
But we're done with that now. We're moving on to the men's match, right? When's that?
9:20 tonight, so I'm not even going to see the
Yikers,
tip-off.
9:20?
Exactly.
Wait, we got an eclipse and the Final Four in one day?
And you got Coach Calipari leaving Kentucky for Arkansas, perhaps the biggest news of the day.
Wow.
See? She has no idea.
I don't. I really
She has
don't.
no idea.
But he said it like it was really important, so I'm just going to be like, yeah, it's cool.
It's huge. It's like
Tell me more about that.
CEO of your favorite big energy company walking across the street to the direct competitor.
Whoa.
With you just didn't see that coming at all.
That would be cool.
That would
okay.
be cool. So
Thanks.
that's
He got
kinda-
me interested.
That's kind of what we're doing here. All right. With our news in New York City, here is Michael Barr.
Thank you very much, Paul, Alex, and John. Millions of Americans will be looking to the skies today to witness a rare total solar eclipse. 15 states are in the path of totality, from Texas to Maine, and people have traveled from across the country and beyond hoping for a great view. This man traveled to Niagara Falls with his daughter to see the eclipse.
We've been talking about coming here for this event since, 3 months before she was born?
New York Governor Kathy Hochul.
Some people across the state have traveled hundreds of miles. Others from out of town have traveled thousands of miles to come. And for one good reason, the stars are truly aligned for New York.
The eclipse will start after 2 p.m. Former President Donald Trump is declining to get behind a nationwide ban on abortion. In a long-awaited announcement posted on his Truth Social account, the presumptive Republican nominee said states should decide their own limits. He did not say how late into a pregnancy he thinks the procedure should be banned, but...
Like Ronald Reagan, I am strongly in favor of exceptions for rape, incest, and life of the mother. You must follow your heart of this issue, but remember, you must also win elections to restore our culture and, in fact, to save our country, which is currently, and very sadly, a nation in decline.
Former President Trump also said he strongly supports access to in vitro fertilization. Actor Jonathan Majors was sentenced to probation but avoided jail time for assaulting his ex-girlfriend in a high-profile case that derailed the once promising star's career. The 34-year-old former Marvel actor had faced up to a year behind bars after he was convicted of misdemeanor assault by a Manhattan jury in December. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. After Friday's bang-up jobs report, traders scaling back their expectations for Fed rate cuts this year. That has stocks a little change right now. 10-year Treasury yields, they're higher, coming within at some point striking distance of 4.5%. Meantime, Caterina Simonetti at Morgan Stanley advising caution on the part of investors right now.
This is an absolutely great time to rebalance the portfolios and go back to basics, where investors should be looking at their, total allocation. And if any of it is skewed to any one sector or individual name, this is certainly the time to rebalance.
2-year yields right now, 2 basis points higher, 4.77 there. The 10-year, that's up 2 basis points. That's at 4.42, we'll call it. As far as the major averages, S&P 500 up 4 points at 52.08. Dow Jones Industrial Average 13 points higher, and the NASDAQ 100 is 11 points higher right now. Cryptocurrency-linked companies rising as Bitcoin, that crossed $70,000 per token, 71 I should say. Amazon.com shares, they're also higher. They could close in on their record high set back in July of 2021. Of course, the company's been cutting costs and also trying to restructure its business. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, John Tucker. I'm Alex Steele here with Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top analysts from all our great coverage. We cover about 2,000 companies in 130 industries worldwide. We are broadcasting to you live from our Interactive Brokers studio right here in Midtown Manhattan. You can also check us on YouTube. So Bloomberg Intelligence has an amazing arm of analysts cover companies and themes. We also have something here at Bloomberg called Bloomberg New Energy Finance. And the idea behind it is to provide data on commodities, power, transport, industry, buildings, and agriculture, as well as new technology as we kind of build a more sustainable world, right? We know we're transitioning, and we know we have to get there, and how you finance it is the huge question. And there's a big gap between like the VC things and then the scalable stuff, and helping to finance that gap is very tricky. So we thought every Monday we would bring you an amazing analyst from BNEF and sort of talk through some of these issues that we're confronting. So this time we're going to talk about EV charging. So Ryan Fisher is Bloomberg BNEF EV charging team leader, and he joins us now from London. So I guess just to start off, who are the big players in EV charging?
Yeah, so some of them maybe not quite household names yet, but you've got ChargePoint in the US, certainly people may have heard of. And the sentiment was pretty positive a few years ago. Stock prices up, and then everything has kind of crashed down. Sentiment not so great. Some of these companies have not met the targets that they might have done. But what we're starting to see is a few companies that you definitely won't have heard of actually have started to post some positive profit margins. So there's like fast charger manufacturers in Europe called Kempower, making the kind of units that can send big power to EVs and charge it fast. And then you've got some of the ones who do the slower power units as well. And then also you've got a couple of these companies that you may have heard of, like ABB, producing chargers as part of a portfolio. So they're selling transformers, and they're sort of using that as somewhat of a way to get into companies and sell some of their other products that they've got and add it on as an additional. So lots going on the hardware side. And then you've got operators. So these are like the companies who basically will sell the electricity to charge a vehicle. You kind of think of it like filling up with petrol. And none of those so far are profitable, but we have seen some good signs. So some of those being EBITDA positive now. Fastned posted that, which is a Dutch one the other day. In the US, none profitable so far, but there's a company called EVgo. You may have heard of, who has these fast chargers, and they actually basically delivered 191% more energy in 2023 than they had in 2022. So good progress there.
So Ryan, where are we kind of, I guess, on a timeline of kind of getting enough charging capabilities into the system that can really support, a wide adoption of EVs? It feels like we've hit a speed bump here. What's the timeline, do you think, when you talk to folks in the industry?
Yeah, it's an interesting one because we cover the global market. So you look at China, and they installed about 1 million of these public chargers last year, and the US did sort of low tens of thousands. So there's a big difference depending on where you are in the world. I think the US and Europe are more similar in how they'll play out, and Europe is maybe just 5 years ahead. So Europe has got actually loads of competition at the moment, and the story a little bit when we look at this is some of the companies looking like competition is starting to weigh on the demand that they're delivering because it's a bit monopolistic. So I want the best land as a company, and I want the best grid connection, and I want that to be somewhere that people are going and somewhere where people can buy things. And they're realizing that, well, the demand isn't quite there yet, but if we believe in the long-term trajectory of EVs, let's get in this business, let's get those spots. So we've seen that in Europe, and I think the US is just starting to tick over. The US has been hugely dominated by Tesla. So if you look at Tesla on the vehicle side, kind of 80% of these pure battery electric vehicles 5 years ago, kind of Teslas. And then they also provide the supercharging, and that's kind of pushed all the competition out. But what we saw last year was some of these other automakers really producing the EVs, and therefore providing a market for other people to come into. But the US slightly behind basically the global, maybe just because Tesla has this dominance in the market.
This is a super dumb question. Where does a charging operator get the power to then enable me to put a Tesla into that network?
Yeah, it's an interesting one. So there has been a lot of these companies that are going out and they're saying, do you know what? Instead of putting 2 chargers in at my petrol station where the power exists, I actually now need kind of 12 chargers. And in some cases, when you look at, for example, the Tesla stations, they've got like 100 chargers in one spot. Now that becomes a big grid connection. The next thing is charging the trucks. So this could be like the same amount of power as a town. And a lot of the utilities are taking too long to do it. So it's like, how long does it take to get a permit? How long does it take to actually get energized? Can you make the agreements with the land leaser? All of this has kind of slowed it down. But clearly, industry is trying to work together, and this has become a big topic for the automakers and the utilities as well. Some of them trying to sign contracts on site. So if you imagine these companies, small fry, like several small meters across multiple places, the utilities maybe not so interested in that. But now they're actually delivering a lot of demand. So as I say, looking to other markets in the US and China being a good example, the public chargers in China now deliver more energy than the whole of Ireland. So lots of energy, and therefore that becomes interesting because if you're an energy developer and you're doing like solar on site next to it with a battery, and we've seen Watt EV, which is one of these truck charging companies, basically build a station that's not connected to the grid at all. It's just got straight to the solar and a battery. So cool innovations going on there.
Hey, Ryan, here in the U.S., EV sales have slowed materially, and a lot of people are trying to think there's a combination of reasons, price being a big one. But one of those drivers is just the lack of a fully ubiquitous charging infrastructure. When you talk to your EV companies, how do they think about it? Are they concerned about the long-term demand of EVs in general? And if so, do they feel like they can be part of the solution there?
Yeah, and there's definitely kind of differences in opinions. The US Hyundai CEO saying something along the lines of today, why buy an EV from an automaker who's lobbying against EVs? And obviously he's talking about the US there, but you do see a difference in those that are kind of in on it and those that aren't. And I think some who aren't have previously been so. They've committed billions, they've talked about targets, and then they're starting to row it back. And some of that is maybe because the technology is behind, they can't do it as cheap as everyone else. So there's different reasons. And I think when you look at liabilities, I don't think that's talked about enough, actually. Some of these companies have put cars out there, and then the battery's had a problem, and they've got to recall it, and that could be multi-billions. So I think there's some caution as well in saying, why don't we put a few less cars out, because then we can learn from them and we can do it later. Some of the narrative has been they're not putting the cars out because quite feasibly the battery operations are not up and running, but I think there is other reasons.
Ryan, hey, look, this was great. We really appreciate it. Ryan Fisher, Bloomberg BNF, EV charging head. And we'll be doing this every Monday, talking about different areas within the energy transition. This is why Paul's stuck with me. I'm going to make him talk about all this all this stuff. But interesting, you might have like, little power centers around EV charging networks. Anyway, this is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. We'll look at some of the company stories we're following. Let's start off with the Trump Media and Technology Group. They said in a recent regulatory filing that it will keep BF Borgers, a Lakewood, Colorado-based accounting firm, as its auditor after starting to trade publicly late last month. Now, the Canadian regulator said last year that BF Borgers violated its rules for auditors, while the U.S.'s Public Company Accounting Oversight Board found multiple deficiencies in every audit it reviewed from the firm over the past 2 annual checks. The Trump media said in a statement that articles about BF Borgers' record were partisan and preemptively attacking our auditors. Shares of Trump Media, by the way, ticker symbol DJT, down another 10% just in today's trading. Chanel in talks to purchase a building on Manhattan's Fifth Avenue, joining the competition among the world's top retailers to snap up spots on New York's iconic luxury shopping corridor. Chanel in discussions to buy 745 Fifth Avenue, according to a person familiar with the matter. The brand competing against LVMH, Moet Hennessy, Louis Vuitton, which has also been in talks to acquire the building at the corner of 58th Street. And consulting company, the Perryman Group, estimates the U.S. will see $1.6 billion boost in direct spending by visitors viewing the eclipse, and a $6 billion economic boost overall when you factor in indirect sales. Well, some companies had to stretch a little more to take part in the eclipse frenzy. PepsiCo's Sunships brands, they're releasing a limited edition offering which will only be given away during the 4 minutes and 27 seconds of the solar eclipse's duration of totality. I don't know how that's going to work, but anyway.
I don't know.
Anyway, that's your company news. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Monday, happy solar eclipse day. I'm Alex Steele alongside Paul Sweeney. We're live from the Interactive Broker Studio right here in Midtown Manhattan. You can also catch us on YouTube. We cover all the top news with our great Bloomberg Intelligence analysts. They cover 2,000 companies in 130 industries worldwide. We also cover world and national news with Michael Barr. Michael.
Thank you very much, Alex, Paul, John. In a little over 2 hours, most of the continental U.S. will see at least a partial solar eclipse, with over 30 million people in the path of totality, where the moon shadow will cover the sun. Bill Nye, the science guy, he has been teaching people about science for more than 30 years. Nye says that it's important to get special eclipse glasses in order to look directly at the event.
We just want to stare at this phenomenon. And that's where it gets, as the expression goes, a little bit dangerous. So everybody, we want you to have your eclipse glasses, your official size and weight eclipse glasses. And these are about 100,000 times darker than sunglasses.
Bill Nye is also the CEO of the Planetary Society, a nonprofit supporting space exploration. The states should decide the law. That's what former President Donald Trump is saying in his long-awaited announcement on his position on abortion rights. He posted it in a video on his Truth Social account.
At the end of the day, this is all about the will of the people. You must follow your heart or, in many cases, your religion or your faith.
The former president stopped short of calling for a nationwide ban on abortion or when in a pregnancy he thinks the procedure should not be allowed. Moments after a Southwest Airlines flight left Denver, it was back after making an emergency landing. The engine cover came apart and tore off. Everyone on board ended up fine, but the incident gave some of those on board quite a fright.
Let's go ahead and declare an emergency for Southwest 3695, and we'd like an immediate return. We got a piece of the engine cowling hanging off, apparently.
The Houston-bound flight had 143 people on board. UConn and Purdue have dominated this year's NCAA tournament. Now they're set to meet for the national championship tonight. The Huskies are going for their first repeat men's title since Florida in 2006 and 2007. South Carolina won the women's NCAA title yesterday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, and now Charles.
All right. Thank you so much, Charlie Pellet. John Tucker left. That was the transition there.
Works.
Yeah. Okay, so weed is legal
Yep.
in New York City, for example, New York. And here's a question for you. Do you like it? And if you don't like it, do you complain about it? So here's a story coming from Washington, D.C., that apparently a 76-year-old woman in Cleveland Park sued a tenant who lived in a rental apartment near her, adjoining her home, arguing that she was made ill by the smell of the smoke from the cannabis that he was using. So apparently back in June, a judge ordered the tenant to refrain from smoking pot not only in his own home, but also within 25 feet of her residence.
His claim was, I only do a few puffs each night. Quote, I'm not Snoop Dogg, he said at his trial.
That's a solid argument to make
Exactly.
it a trial.
I don't know. I was raised in the generation where your parents were like, drugs are bad, awful, don't go anywhere near weed, all that kind of stuff, the gateway drug, all that kind of stuff. We weren't that strict with my kids. So, but still, when I smell it now, I definitely, obviously notice it, and I'm like, and it's definitely still new.
Yes.
And your initial reaction is, oh my God, I smell weed.
Totally.
Which is like,
where are the cops?
Yeah, exactly. But then you're like, oh, it's just nothing anymore. It's no worse than, now I'm just telling myself, hey, it's no different than cigarette smoke,
But it does ring true, right? So, like, what do you do? Would you
No
sue
big
someone
deal.
if you didn't like cigarette smoke that was coming in through an open window? I mean, that would be tricky.
No.
That's why this was kind of a landmark case. It is interesting. My daughter's 9.5, as we know. So when she's like, hey, Mommy, what's that smell? And then we have to have that conversation where you're not going to trash a drug, right? Because it is legal, but you want to be like, oh, but also don't do it, and fentanyl is bad.
Right.
That's sort of like my sentence that I put all together in one. And she's like, I got it.
Anything you say that, and fentanyl is bad.
Yeah,
right,
yeah.
Exactly.
Don't watch that TV show, and fentanyl is bad. That wraps it up for us.
Yes, Balance of Power coming up.
Enjoy your eclipse.
Yeah, I will. Balance of Power, Joe Matthew, now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's about to happen. Not the eclipse, but the return of Congress. Welcome to the fastest show in politics as lawmakers make their way back to the Capitol after a 2-week recess. It's actually been more than 2 weeks, with big questions about whether they can get anything done here. We'll look at the job ahead, from Ukraine to Israel to taxes, with Bloomberg's Mike Dorning joining us live this Monday in the Capitol. Janet Yellen back from her second trip to China in 9 months. We'll discuss her message and whether it resonates in Beijing with Craig Singleton from the Foundation for the Defense of Democracies. Donald Trump with the big announcement on abortion. He avoids taking a stand on a national ban. And Joe Biden trying again at forgiving student loans. We'll talk about it all with our signature panel. Rick Davis and Jeannie Shanzano with us, all after we take a look at Wall Street. We start there right now in New York with Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Indeed, happy Monday. We have got the Dow, the S&P, both in the red right now, giving up earlier gains. 1 point drop on the S&P to 5202. Right now, we have got Dow Industrials down 19. For the Dow, that is a decline of less than 0.1%. Perhaps the key takeaway right now, a little change for the U.S. equity market. NASDAQ higher by 6. We've got the 10-year 4.42%, with a 2-year that's yielding 4.78%. Spot gold down $1.80 the ounce to $23.27 for gold, a drop of just under 0.1%. At a retreat for crude oil, $85.55 for West Texas Intermediate crude, down by 1.5%. As for the interest rate backdrop and the outlook for Treasury yields, Subhadra Rajappa is head of U.S. rate strategy at Societe Generale.
Now we're in a different environment where the Fed's bias is clearly towards easing. So they've told us that they're thinking about rate cuts sometime in the second half of this year. So that, I think, kind of mechanically puts a cap on how high yields can rise from here on. The supply picture hasn't really changed meaningfully, but that said, I think that the market's going to be biased towards lower yields from here on.
And again, 10-year right now, 4.42%. We've got Amazon shares pushing higher, trading at a record. Amazon right now, 185.70, while fellow mega-cap tech giants, including Meta, Microsoft, and NVIDIA, have breached records in recent months. Amazon has been leading the pack among some of those tech names. Meta down today by 1%, Microsoft down 0.3%, NVIDIA down 0.8%, but to be sure, we've got Amazon pushing higher, up by 0.4%, trading at a record. Again, recapping, stocks are trading mixed right now, with the S&P down 2 points now, a drop of 0.1%. Balance of Power continues. The Monday edition, back we go to Washington, and once again, here he is, Joe Matthew.
All right, Charlie Pellet, I'll ask you at some point what you're going to do to see the eclipse. That's a big building up there in New York, world headquarters. And I figure they've got some sort of cool eclipse deck lined up with the special glasses. I, for one, will be the anchor that does not put on the glasses today. I watched people do this all weekend thinking it was really cool. Here we are on Eclipse Day. Everyone's got their glasses, guys. We know what they look like. But we will connect with Julie Fine in the zone of totality a little bit later on this hour. She's, of course, our Texas bureau chief, where just hundreds of thousands of people have traveled, states like Texas that are in the zone to get a piece of this thing. Our own producer, Matt, drove all the way up to Rochester, New York, and he promised pictures. I'm hoping that works out for him. In the meantime, the rest of us here in the Capitol, as we wait for the lawmakers to return. They're coming in already. Senators today, the House back tomorrow. And this is, of course, after 2 weeks of time to think in the home district work period with a long list of things to do. So one thing we're going to do here is talk to Mike Dorning about that list, what we might see in the next couple of weeks, because this will be pivotal to the future of Mike Johnson's tenure as Speaker, and Craig Singleton will be in a bit later on as Janet Yellen wraps her trip to China. First of all, Mike Dorning, of course, Bloomberg Politics reporter and editor with us here in Washington. Great to see you, Mike, on this Monday.
Great to see you.
You know that beautiful feeling when they're all coming back into town.
Yes.
Yes, the sound of possibilities. Hopes are high, actually, that there might be a Ukraine funding bill. I'll ask you about that, but it seems first they're going to tackle FISA. And it's pretty interesting because we're dealing with this so-called warrantless spying program. This is 702. And this is one thing that conservative Republicans and progressive Democrats agree on, that the government should get a warrant if they think they're going to be spying on an American.
Yeah, so now this is something where the divide is not so much partisan. It's between people who are more civil liberties minded, both on the left and on the right, and people who are more national security minded and want to give the intelligence agencies as much flexibility as possible. So it's that clash between privacy, civil liberties, versus being absolutely certain stopping terrorism and other foreign operations. And Johnson's right in the middle of this. There's very strong feelings on both sides in the Republican Party on this. Now, an interesting little tidbit was that the administration went last week and got all of this reauthorized for another year with a court order under the old law. So even if it does expire on April 19th, they're kind of set, except for new providers who come along and you can't get a new warrant.
This will be handled first in a floor vote, likely. Do they have to reconcile these two Republican bills that are outstanding? They're competing bills, both from Republican-led committees, Judiciary and Intelligence. What don't they agree on here?
They don't agree on the warrant aspect. There's other safeguards that they don't agree on. They do agree that there should be some more supervision when it comes to U.S. persons. Essentially what happens is they suck up all this data about people's phone calls and internet usage and text messages around the world that involve so-called foreign persons, but sometimes U.S. persons, that is either a citizen or a legal resident of the United States, gets involved because they're on the other side of that. And they have giant computers that can scan through all of that.
These are Americans who are either knowing or unknowingly talking to bad guys abroad and get intercepted in
those conversations.
Does that get a vote this week? Mike, what's the schedule look like here? Because Ukraine is right on its heels.
Well, they're shooting to get a vote this week, but it's not yet clear how exactly they're going to hammer things out. And they're going to be looking at that tonight and tomorrow. I very much doubt, and our reporters covering it very much doubt, that Ukraine will be voted on this week.
Yes, that's going to be a couple of weeks, it looks like.
Well, remember, they're going on another 2 week, or they're going on another vacation after 2 weeks.
That gets done in this work period then?
So if they don't do it in the next 2 weeks, the House goes on vacation
Doesn't
again.
sound like you expect them to.
Yeah, it's unclear because there's not really a plan yet. There's not really even. They're not taking soundings yet on a strategy.
We don't even know if this is a loan or not at this point, right?
Yeah.
I mean, literally.
Although probably making it a loan is an easy thing. All the Democrats would be happy to go along with that because it's a loan that's never going to be repaid.
Sure.
Anyway, it's just a sort of an accounting measure that on the outside chance that Ukraine quickly bounces back into an economic powerhouse.
Yeah, right.
Yeah, they would pay you back.
Stay close. I'm sure we'll talk again this week. Mike Dorning, great to see you. Bloomberg politics editor in Washington. Wanted to have this conversation so you have a sense of what's coming up this week, but also to lay down a marker here on FISA. You're going to hear a lot about that if you care about Washington politics in the next couple of days. 702, warrantless spying. That needs to be resolved. Speaking of spying, we're going to turn to China right now in a very important trip for Janet Yellen. Her second in 9 months to China. It's going to be followed by a trip by the Secretary of State, Antony Blinken. And as we try to get a sense, following the readouts and some of the other information that we've seen, to try to get a sense of what came of this trip, we want to connect with Craig Singleton. I've been looking forward to this conversation. With us from the China program at the Foundation for the Defense of Democracies, where he is senior director. Craig, it's great to see you. You can read the readout, you can read the news coverage and get different perceptions. I want yours. Was this a productive trip for Janet Yellen? And if so, what did we get for it?
Yeah, no, thanks, Joe. I mean, I think the short answer is that Secretary Yellen's trip accomplished very little. Secretary Yellen is many things, chief among them an accomplished, I think, respected economist, but she's not an enforcer. You know, she's not the person you send in when you want to throw down the hammer, so to speak. And Chinese leaders more or less dismissed out of hand all of her concerns, which doesn't particularly bode well, I think, for next steps. I think from my perspective, at least, her trip sort of extends this illusion of constructive engagement between the two superpowers, but without actually addressing the core issues that are sort of fueling today's tensions. And, you know, separately for its part, at least, you know, China was very keen to capitalize on this trip for propaganda purposes, using Secretary Yellen's visit to project calm to investors who are very concerned about China's overall economic health and China's meager growth prospects.
So there are a lot of audiences here. When it comes to the audience in Beijing, Craig, what does it mean for an American official to pay a visit and ask you to rethink the way you're managing your economy? In this case, boosting its manufacturing capacity, saying, hey, you guys really ought to worry about increasing domestic demand because that's not working as well for us. What's the reaction?
No, I mean, I think it's been pretty clear for some time now that China's leadership has very little to maybe no interest in enacting major structural reforms to address the country's current economic challenges. So what we're seeing, right, is a sort of a back to the future approach in which China floods international markets with cheap, heavily subsidized goods to stimulate growth. And one major concern, for example, centers around electric vehicles. You know, China is intent on dominating this emerging sector. They see it as critical to leading the next industrial revolution. And with China's EV market already very heavily saturated, you know, China's thinking about dumping EVs on global markets, including here in the United States, which would have a pretty serious impact on U.S. automotive manufacturers, U.S. laborers here. And so while countries like Brazil and Argentina are getting ahead of Chinese dumping and raising tariffs to protect their industries, the Biden administration has yet to do that. And I think that's really a major mistake and a real missed opportunity here.
Well, so what does that mean for tariffs going forward? If we're dumping EVs or solar panels, whatever it is, Craig, this administration actually has not had a lot of sunlight between itself and the Trump administration when it comes to tariffs, although Donald Trump is talking about much higher levels if he were to be reelected. How about for the Biden White House?
Sure. I mean, I think what we're seeing right now is a reflection not of U.S. policy on China, but global pushback to China. You're seeing talk about raising tariffs and protective measures across Latin America, across Europe, and that's mostly in response to Chinese behavior. I think what the corollary to me is when the Obama-Biden administration was really trying to tackle Chinese hacking and cyber attacks against the United States, the Chinese out of the gate admitted those are activities they don't engage in. Just like today, they acknowledge and say that we don't engage in dumping and non-market practices. And a great deal of time is spent negotiating a deal like that cyber deal. And then what do the Chinese do? They go about and actually increase the number of cyber attacks against the United States with absolutely no punishment from Washington. So I think China's perspective is let's buy some time here, get ourselves out of this economic chaos and crisis that we've created for ourselves, and do so at the expense of American workers and American companies and increasingly worldwide competition as well.
Spending time with Craig Singleton here on Balance of Power. What do you make of the proximity of this visit and Joe Biden's meeting with President Xi? I guess that was about a week ago at this point, Craig. Were those companion conversations, if you will? Did that meeting with the presidents need to come first?
Yeah, I mean, they had a call, President Biden and Xi Jinping had a call last Monday. I think there's a strong effort to sort of portray the bilateral relationship as stable or improving, but I think it's sort of a fallacy here. Since Xi and Biden met in San Francisco last fall, the U.S. intelligence community has confirmed that the Chinese are actively meddling and interfering in our election. Chinese state-directed hackers have been identified as not just accessing, but seeking to compromise our critical infrastructure like our ports and electrical grids. Chinese Coast Guard vessels are ramming Philippine ships in the South China Sea, knowing full well that the Philippines and the U.S. are defense allies. Those are hardly, I think, reassuring. I think for me, at least, the principal paradox of the Biden administration's China policy lies in its unintended consequences, right? So far from mitigating Beijing's brashness, a lot of these recent diplomatic overtures have emboldened Xi. And I think with Washington's attention diverted to Ukraine and Israel and to a number of pressing domestic matters, we're continuing to accommodate Beijing's aggression today, and that really risks Chinese overreach tomorrow and maybe miscalculation or war.
Well, you mentioned miscalculation. Isn't it something we have diplomatic messaging like this between Janet Yellen and Beijing, the outreach that we see, a personal visit, while we're talking today about the Biden administration laying out billions of dollars to Taiwan Semiconductor so they can come here and build foundries in the United States, as we talk about banning TikTok if it's not spun off from ByteDance. Craig, how do you have all of these at once?
Really expensive proposition. You really have to think about, can we wage industrial policy well? I think at least on the TikTok front, the clock is ticking on this TikTok bill, despite passing overwhelmingly in the House. Senate leadership, particularly Senator Maria Cantwell, has not even scheduled a hearing, let alone a vote on the legislation. And in the meantime, TikTok's lobbying team, which is the largest of any Chinese company in Washington, is aggressively moving to kill this bill. I think there's, there is really, though, next to nothing from stopping a bold national security focused senator from attaching the TikTok bill to a must pass piece of legislation like the National Defense Authorization Act. That would absolutely, ruffle some feathers here in D.C. But at the end of the day, I'm not sure senators can run or be perceived as being weak on China during an election year. And President Biden has already given them top cover by saying, I'll sign this thing the second it hits my desk.
Well, that's true. Are senators hearing the right pitch? You mentioned the lobbyists who managed to snuff out this story for a good year in Washington. Somehow it came back. This gets a new breath of life in the House. Senators have been briefed by the White House. They've had classified security briefings on this, Craig. Are they hearing what they need to?
I think they are. No one that I'm aware of, no member of Congress has walked out of those intelligence briefings saying TikTok's not a threat. I think what they do sort of disagree on is whether this proposed legislation, which seeks a forced divestment, not a ban, a forced divestment of TikTok, is the way to go. And I think that there's some discussion about whether the bill needs to be expanded in terms of scope. And I think ultimately those efforts, a lot of them which are being championed by TikTok's lobbying team, are aimed at killing the bill, making it too big so that it fails. I think in this case, it's narrow, it's focused, it's been reviewed and drafted in partnership with the Department of Justice to ensure that it can withstand court challenge, and there certainly would be one. But at the end of the day, we're approaching a consequential election in a few months. The intelligence community has made clear that TikTok is the most important tool that the Chinese have to influence public opinion. It's time to ban it.
There you go. Craig Singleton, great to see you, Craig. Thank you for joining here on a Monday, Senior Director of the China Program at the Foundation for Defense of Democracies. Both presidential campaigns are on TikTok. We'll have more on that next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Wells Fargo upping its S&P 500 target to 5535, the highest on Wall Street right now. To put that in context, we've got the S&P just barely above 5200, 5202. The Dow, the S&P, NASDAQ all in the red right now. 2-point drop on the S&P, down less than 0.1%. Dow Industrials down 14, drop there also of less than 0.1%. NASDAQ down 2 points. a drop as well of less than 1/10%. Key takeaway here, a little change for the U.S. equity market. We do have the 10-year now yielding 4.43% with the 2-year at 4.78%. Spot gold down $1 the ounce to $23.28, drop there of just under 1/10%. West Texas Intermediate crude down 1.1%, $85.95 for a barrel of WTI. Spirit Airlines has announced an extensive cost-cutting program less than 3 months after its proposed combination with JetBlue Airways fell through because of antitrust concerns. Spirit shares, they are surging today, up by 4.2%. Shares of JetBlue up by 2.1%. Again, recapping, S&P right at 5,200, down now by 0.1%. I'm Charlie Pellet. Balance of Power continues. Back we go to Washington. Once again, here's your host, Joe Matthew.
All right, Charlie Pellet, we thank you, and great to see you. Welcome to the Monday edition of Balance of Power here on Bloomberg Radio, on the satellite, and on YouTube, where you can find us now. Go to YouTube, search Bloomberg Global News, and you'll find our live stream there. We've got a seat for you, as always, in the studio. A lot to unpack over the weekend, and as we go into this week, a lot to look ahead to with the return of Congress, some important messaging coming from both campaigns as well. That was certainly the case for the last couple of days. Big fundraiser in Palm Beach we talked about. This was the $50 million haul for Donald Trump, not to be outdone by Joe Biden, Bill Clinton, and Barack Obama, who've all together pulled in about half of that at Radio City Music Hall. I'll tell you what, though, when you look at the fundraising, it's really not a conversation. Even after that massive haul, President Biden pulling in $90 million for his campaign and for the DNC in March. And this is not really a contest at the moment when it comes to money. That does not mean that it'll turn out that way when it comes to voting. And that's where we begin with Gregory Cordy, who I'm glad to say is back with us. We lost him for a couple of weeks out in the field covering the campaign, and now back at the table. Bloomberg politics reporter. Great to see you, Gregory. I hope that you've been well. I think it's been since the poll that we had a chance to speak. $90 million for Joe Biden. He continues this string of fundraising hauls, even as Donald Trump tries to get serious in Palm Beach. Will that one night, before I ask you about some of the rest of this stuff, for Donald Trump actually make a difference?
The thing about that one night is that he went to a very small number of about 120 big mega donors who are now tapped out. They cannot contribute any more
literally
legally
hit the limit
to the Trump campaign and his associated party apparatus. Now, they can still continue to give to super PACs. That doesn't mean that some of these billionaires aren't going to be big players in this election. But it shows the perils of Trump's fundraising strategy, and it's been inverted now. Donald Trump is getting money from big billionaire donors, and Joe Biden is now all of a sudden the small dollar guy. Trump has found his problem is going back to the well again and again and again. That's been the source of a lot of his strength in fundraising over the past couple of cycles. Going to these small dollar donors who are giving $25 a month, $50 a month, they're fatigued. They don't have any more to give. And so we'll have to see how this plays out, but I'd obviously much rather be in Joe Biden's shoes from a fundraising perspective than Donald Trump. And Donald Trump, by the way, is also bleeding cash for legal bills that Joe Biden doesn't have.
He's got more than double on hand, $192 million cash, the most ever amassed for a Democrat at this point. But then the question becomes, what role will money play in this campaign when he's competing against the king of free media?
Yeah, and that's something that the Biden campaign is banking on to change the dynamic of this race.
How do you do that?
Every time we talk about the polls, and you go to the Biden campaign, you say, how are you going to turn these polls around? They say it's going to be through the messaging that we do with all of this money we're amassing, with ads that tell people about what we've done for the American people, what we've done for the economy. They think they have a story to tell. That story is not getting out. They need this money to hope to even up the race.
Well, let's talk about the issues, because Donald Trump tried to seize on one today. That is abortion. While the president's talking about forgiving student loans, this was a long-teased announcement from Donald Trump, and it was kind of a non-announcement. He's not even taking a stand on a national ban. We thought this might be, gosh, how many weeks will he announce? Is he going to go for 15, or would it be closer to 6 like the state he lives in Florida? None of the above. He says it should be up to the states. The man who likes to take credit for undoing Roe v. Wade
says everyone agrees essentially that this should be a state issue. What did he just do for his campaign by actually making that announcement?
He's really trying to thread a needle here, and frankly, not making the partisans on either side particularly happy. We've seen the anti-abortion groups come out and express some pretty severe disappointment with this position, and of course, it's not going to help him with people on the abortion rights side who, as you say, blame Trump appropriately for stacking the Supreme Court. Stacking might be a loaded word. He nominated 3 pro-life justices and got the Dobbs decision, which now puts him in a position of having to take this stand. The one thing about Roe v. Wade is that it was settled law for more than 50 years. Right. Now we have every state for himself. Trump is backing that sort of regime for abortion law, and it's not making anybody happy.
So Joe Biden can just start making the ads now, or just keep running the ones he's already made on this issue. Nothing really changes there on the matter of abortion. Turn to student loan debt forgiveness. He's taking another swing at this. Plan B is what I'm reading. Remembering the Supreme Court knocked down his first plan. You go to Madison, Wisconsin, a great college town, to make the announcement. But I thought this wasn't legal. What is up with the second turn?
Yeah, he's going to try to continue to figure out ways to do this, and this is a much more involved way that goes through a lot more of a regulatory process to get to where he wants to go. Whereas the first try, he tried to shortcut that regulatory process by saying, I can use emergency powers to do this. This is going to take a while. It's unlikely that a lot of people are going to be able to see relief by the election, especially given that we can expect to see more legal challenges. Right. They could affect a lot of borrowers, especially if you have more interest in principal, if you went to a proprietary school that taught you skills that didn't really work out for you getting a job. There are a lot of people who may benefit from this if Biden can actually turn this into reality, and that's a big if right now.
You said something important, though. If this is something that wouldn't really take effect for most people till after November, he can run on this for the rest of the campaign.
He can, but one of the things that we've seen in our polling is when you ask younger voters about Biden, and this is a demographic that Biden is having a lot of trouble with, not just because of the student loan issue, but also because of the war in Gaza. Right. But what you hear from these younger voters is they're not really giving Biden much credit for trying. They want something actually done. Just talking about it is not going to win those voters back.
Well, and they've kind of seen this movie before when it comes to student loan forgiveness. Let's talk about Israel for a moment. Everyone's watching this closely for a couple of different reasons, including his political future. Progressive outrage is questioning the potential to pass Ukraine aid if they're tied together on the Hill. Does anything short of a ceasefire move the needle for him with progressives?
Boy, I think there's a lot of built-in anger over this issue. We see it in our polling. We ask an open-ended question about what people have heard about Joe Biden recently, and the phrase Genocide Joe comes up quite a bit. Wow. In respondents, particularly among those progressives that Biden needs as part of his coalition. And these are voters, obviously, that are not going to vote for Donald Trump. But the question is, are they going to stay home? And this is a very emotional issue. Biden, I think, and the Biden campaign knows that they have a lot of work to do to mend fences there. And what we've seen from Biden over the past 6 months is, since those October 7th attacks, is full-throated support for Israel, turning into incrementally a lot more criticism. It's happened slowly. It's like boiling a frog. But we'll see if Biden gets to a space where then the progressive wing of the party now gives him a little bit more leeway than they gave him over these past few months.
That's why, because you made a great point. There's, in many cases, young people and progressives are tired of promises. They want to see action. A ceasefire would be that action. You wonder as well, with more than 6 months to the election, though, if time is the tonic that Joe Biden can count on here.
I mean, we can talk about that in terms of Israel. We can talk about that in terms of the economy.
Absolutely.
We can talk about any number of ways. Biden needs time to change the dynamic of this race, and 6 months is a lot of time. But boy, you've got to see some movement month over month, sooner or later.
Just lastly, you mentioned the poll. You've been deeply involved in our swing state poll that we conduct with Morning Consult. I don't know when the next drop is. I suspect people are in the field now, as a matter of fact. But we've seen some improvements for him in places like Michigan. I don't know if you can call Pennsylvania that. I think he's reaching a tie there. He needs to see 3 or 4 states continue to improve to actually be considered in the game. Is that fair to say?
Absolutely, and he is seeing improvement in those blue wall states. You mentioned 2 of them, Michigan, Pennsylvania, and then Wisconsin, where he is today. And it's, by the way, it's the second time he's been to Wisconsin in the past few weeks. So that tells you a lot about his strategy to solidify those blue wall states. But blue wall states aren't enough alone to get it done for him. That gives him 269 electoral votes. He needs 1 more from somewhere else, be it Georgia, Nevada, Arizona, North Carolina, or the 2nd District of Nebraska. But that's a whole other story.
That's a great story, by the way. Come back and talk to us about that. Fascinating stuff. Great to see you again, Gregory Cordy. See, he's still with us. I know you missed him as well. I'm Joe Matthew in Washington. We'll assemble our panel next. Rick and Jeannie both on board for the Monday edition today, and it's time to check world and national news. For that, we turn to Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. The Israeli military is withdrawing ground troops from the southern Gaza Strip. Senior UN aid official in the Middle East, Jamie McGoldrick, says Israeli forces have pulled out of Khan Yunis.
What that means is that hopefully that will be a lot more secure in those areas, and maybe people can start to go back to where they came from.
The IDF says the 98th Division is leaving the Strip to recuperate and prepare for future operations. Former President Trump has put out his position on abortion in a video posted on his Truth Social account. He says it's up to the states.
My view is now that we have abortion where everybody wanted it from a legal standpoint, the states will determine by vote or legislation or perhaps both, and whatever they decide must be the law of the land, in this case, the law of the state.
Former President Trump did not say how many weeks in a pregnancy he thinks abortion should not be allowed. President Biden taking another crack at widespread student debt relief. The White House has outlined a proposal that could forgive loans for up to 26 million Americans who meet certain criteria. Brown University political scientist Wendy Schiller has more on what makes this time different.
Right now, the Biden administration is really focusing on people who essentially, put money down and a school closed prematurely, or they paid for an education and they didn't get enough classes.
Brown University's Wendy Schiller spoke on Bloomberg Daybreak. Excitement is building as today's solar eclipse is just hours away. It is the first total eclipse visible in the U.S. since 2017. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Little change for the U.S. equity market right now. We've got the Dow lower, down 4 points, down less than 0.1%. S&P also little changed, up by 1 point, while NASDAQ Composite Index up 8 right now. That is an advance of just about 0.1%. 10-year at 4.43% with a 2-year 4.78%. Spot gold trading lower by $2.50 the ounce to $23.27, a drop of 0.1%. And West Texas Intermediate crude down 1.1%, 85.94 for a barrel of WTI. World financial markets are awaiting a major report on U.S. inflation, and that would be the March Consumer Price Index. It is set for release on Wednesday. And with a preview, here's Bloomberg's Vinny Del Giudice.
Bloomberg Economics says persistent disinflation in core prices should allow the Federal Reserve to start trimming interest rates sometime this summer. Fed officials are taking a go-slow approach on easing. There's a risk that the Baltimore Bridge collapse and port shutdown could tangle the supply chain, aggravating the inflation situation down the line. We'll also get the Producer Price Index Thursday and the Import Price Index Friday. Vinny Del Giudice, Bloomberg Radio.
Trump Media and Technology Group shares are plunging 11%. The stock has wiped out some $2.8 billion in value as the meme stock struggles to captivate the retail traders who helped power initial gains. Ticker symbol DJT. Again, the stock trading lower now by 11%. Recapping, stocks are now higher across the board. The Dow, the S&P, NASDAQ all advancing. S&P up 3, up by 0.1%. Balance of power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thank you. Welcome to the Monday edition of Balance of Power here on Bloomberg Radio, on the satellite, and on YouTube, where you can join us now. Search Bloomberg Global News. You'll find our live feed. You can even back it up to hear the last interview if you wanted. A lot to talk about on Eclipse Day. I suspect that the nation's capital will come to a bit of a halt a couple of hours from now when the eclipse happens. We're going to speak a little later this hour with Julie Fine, who's not in Washington, but in the zone of totality. Has anyone made an album called that yet? Zone of Totality. Is there a song, Zone of Totality? Wouldn't that be forthcoming? We'll connect with Julie, where apparently people are flying from all over the country to be part of this as we assemble our panel now on the day that Donald Trump makes his announcement on abortion. This has been teased since the beginning of last week. Didn't know if he'd go for 6 weeks, maybe 15. In the end, none of the above. Avoiding taking a stand on a national ban, pointing to the states. Here's Donald Trump in a video released a short time ago.
My view is now that we have abortion where everybody wanted it from a legal standpoint, the states will determine by vote or legislation or perhaps both, and whatever they decide must be the law of the land. In this case, the law of the state.
The state land. Donald Trump from earlier today. He promised an announcement on Truth Social last night, and there we have it. Our panel today, our signature panel, Rick Davis and Jeannie Shanzano back together again, Bloomberg Politics contributors. Jeannie, what do you think? If you're Joe Biden, this is good news, correct? You can keep running the ads you already made. You can make abortion the same issue that you have been framing it since the beginning of this campaign. What do you think?
Oh, I agree. This is what we call a non-announcement announcement. And he shouldn't have been forecasting that we should expect so much from his non-announcement announcement, because he heightened expectations and then, of course, let them drop. Because what he's saying is that nothing is going to change. It will still be up to the states. And just as we know electorally, the still being up to the states is what we've had since the Dobbs decision, and that has helped Democrats. So they've got to be celebrating in the campaign over there for Joe Biden, at least a little bit, knowing that they don't have to remake these commercials.
Well, I mean, you know, and I say that facetiously. Then again, Rick, maybe you're going to tell me that this is the other way around. If he had reached for 6 or 15 or 12 weeks, that is, and talked about a national ban in any specific way, he would have handcuffed himself to a policy, right? What do you make of this announcement?
Yeah, just depends on who he was trying to make happy. I mean, if he was trying to play to the base and wanted to keep them excited about this issue, then he would have said that there are a lot of good proposals like Lindsey Graham's on a national bill. And he could have said that, there are legitimate debates to be had around the time, and maybe even had suggested 15 weeks or something that has become a bit of a safe harbor, like Governor Youngkin tried to do in Virginia last election year. So there are a lot of options he could have taken. I think he took the one that was going to get him the most blowback from his base. And we see that from Lindsey Graham and from Mike Pence today, which is, hey, wait a minute. We never said this was just up to the states. And so now he's got exactly the opposite of, I think, what he really wanted, which was to be able to have it both ways. And at this stage, no Democrat's going to think this is a great idea to have Donald Trump protecting your abortion rights, and no Republican is going to be satisfied with his answer. So I'd say this was a bad campaign day.
Yeah, why even go there? To your point, Rick, Mike Pence just tweeted. This is a long tweet, by the way. I didn't know you could tweet this many characters. President Trump's retreat on the right to life is a slap in the face to the millions of pro-life Americans who voted for him in 2016 and 2020. Rick, he can't lose evangelicals over this, can he?
Yeah, he can. In fact, Susan B. Anthony released a similar announcement right after he posted his video, and they represent millions of right-to-life voters, and they are completely aghast at the president's decision. Look, I mean, he owns getting rid of Roe v. Wade. He might as well embrace it, take what he can out of it. It does show, I would say, if I'm reading the tea leaves, that they know the polls that, Jeannie talks about all the time, which is abortion can get Democratic core voters and swing women in suburbs excited, and they're trying to put some air out of that tire, but I think they just added gasoline to the flames.
It's incredible. So interesting to think of the way this day is turning for these two candidates then, Jeannie. Joe Biden is in Madison, Wisconsin, in a college town, talking about forgiving student loan debt, and it appears, based on the way this would all work or not work, that he can carry this for the duration of the campaign. So you've got abortion and student loan debt at the top of the stump speech here for Joe Biden. He's obviously got Israel and a number of other issues that are still dogging him. But when it comes to domestic policy, these are two that you might consider in his favor. How do you look at it?
Yeah, you might. I mean, certainly abortion. I think student loan is a bit tougher for Joe Biden. He's going to say it. He's going to run on it. Nobody, if indeed he's able to push this through with this second try, it's not going to be felt in time for the election, which may be a good thing if it's overturned. So, I think that's more of a mixed bag on the campaign trail. And, I would just say that a real problem for Donald Trump, to go back to that for a minute on the abortion issue, is here is somebody who has made his name saying, I am not a politician. I am not part of the swamp that is Washington, D.C. And yet, what do we have here today? Somebody who's trying to play both ends against the middle. This is Donald Trump trying to be the pole, and he is not doing it very successfully. He's getting blowback from all sides. And that is something else the Biden campaign can use, because as much as we want to talk about positive things both campaigns can use to their advantage, this campaign is going to be about the negative, about the other guy. Nobody likes either one of these guys enough to vote for them, but they're voting against the other guy. And abortion and Donald Trump as a regular old politician is not a good thing for Donald Trump, and the campaign's going to use that.
Just quickly, Jeannie, you spend time with students all day. You're not hearing anything, any hopefulness about this announcement today. This is, burned once when it comes to this issue. Show me what you got, Joe Biden, or what are you hearing?
Yeah, we don't hear much about it because they've heard so much talk about it. They want to see action. Without that action, these young people are paying, and you know this well, Joe, because you have a son who will be going to college. It's expensive. And yeah, exactly. And I've got one in myself, and it's expensive, and these kids have no relief. It is a travesty in our system, but it's not one any president, forget about Joe Biden, can resolve on their own. It requires Congress, and we don't see a Congress that's going to act on this.
Rick, what do you think of the big fundraiser over the weekend? We talked about Radio City Music Hall for the three Democratic presidents. It was Biden, Obama, Clinton, a new record. Week goes by, Donald Trump tops that by a lot. $50.5 million, the biggest event we've seen of its kind at a billionaire's mansion in Palm Beach. Was this just about making a point, or does it actually help his campaign?
Oh, I think it absolutely helps his campaign, and part of what helps his campaign is he's making a point, and he needs the money. That's actually number one. And when you can write almost $900,000 checks into a political campaign, and you've got a bunch of billionaire buddies, then you would expect to have this kind of an event. And kudos to the Trump folks for pulling it off. It's not easy, and they did it with a lot less negative attention than the Biden $25 million contributions in New York City. So, but they're going to need that cash. They're still lagging behind the Biden armada of the DNC, his PACs, and his campaign. So they're playing catch up, but they caught up a lot of ways this weekend.
Huh. Fascinating. Jeannie, is Joe Biden going to try to top him now? What can we do here in one weekend?
Oh, yeah, I think he's going to try. I don't know if he'll get there, but you've got to feel good if you're the Biden campaign. The fundraising aspect, unlike the polls, is in his favor still. He has the small donors to go back to. Donald Trump's billionaire friends are, now they are cut out of this thing, at least legally, unless they're going to go to the super PACs. So it's a problem for Donald Trump, not to mention he's got to pay off a lot more lawyers than Joe Biden does at this point.
They're going to be back next hour. Rick Davis and Jeannie Shanzano, our signature panel on Balance of Power. You couldn't have a Monday without them. I'm Joe Matthew on this eclipse day in Washington. We don't get the zone of totality here. We're off to the side, I guess kind of like New York City is. We're going to get, what is it? We get like a 2/3 something. It'll get kind of dark. It'll feel like dusk here for a moment. No one's traveling here to see the eclipse. People are traveling, though, to places like Texas to be a part of this. They're spending a bunch of money on airplanes to get there. They're spending money on Mexican food in Dallas when they arrive. That's where we find Julie Fine, Texas bureau chief for Bloomberg, in the middle of this all. Can't find a place to park or a place to eat, from what I understand. Julie, is this all worth it for you? What if you don't see the? What if the weather doesn't cooperate? This whole travel aspect confounds me.
Well, it's worth it for me because I'm here. But as for somebody
you don't have to travel.
Right, I don't have to go anywhere. I just have to walk outside, work, put on the glasses, and look up. I think for somebody that's coming here, you will see something. You will absolutely see something. It may not be absolutely perfect, but it'll be dark, it'll be dusk for a little while. I think it's an event, and I think people are looking at it that way unless they're really specifically into the science of it. A lot of people made a weekend here in Dallas, which is a very easy thing to do. So I think for people that came, while it may not be perfect, it made for a nice couple of days. It certainly made a nice couple of days for Texas. You've got economists saying that this brought in more than $400 million for the state. There's apparently, according to the mayor, 400,000 people in the city of Dallas right now. So a lot of people headed to Texas this weekend.
Now, I don't know what, by the way, I'm asking about weather. I see you got, 74 degrees now. You're partly sunny today. You could still pull this off, right?
Yeah, I mean, we're watching the forecasts as they come minute by minute. Sure, it's a little bit cloudy, but they're saying absolutely do not lose hope. And yes, it's definitely a little bit cloudy. It is not perfect conditions, but I mean, whether the weather forecasters and meteorologists are saying, do not lose hope on this.
400,000, did you say, in town?
Yeah, the mayor estimated, I received an email yesterday, the mayor estimated 400,000 people in the Dallas area. Now, don't forget, we've got Fort Worth and we've got the surrounding suburbs around here. But look at a Super Bowl, Joe. I mean, a stadium holds 100,000 people, the largest stadium. So you see a bunch of people come in for that. That is not 400,000 people. So just to kind of show you how many people are around, that's a really good example.
So Texas already won, and the states in between. This thing's going to arc all the way up across. If you're with us on YouTube, we're showing you the zone of totality all the way up through Maine. Does it have a festive feel? I mean, you're nothing but sprawl down there in Dallas, right? Can you even tell that everyone's there?
Oh, you can tell everyone's here for sure. There are people
so it's a mob
everywhere.
Scene.
It's a mob scene. Yeah, it's a mob scene. You can definitely sense that people are here. I mean, a lot of schools are closed. Some people are really treating this as a snow day. So, yeah, you can certainly feel that this is going on. I mean, I got in here to park this morning. I'm like, wow, this is the easiest day I've ever had parking. So, yes, people are definitely very into the eclipse.
All right, you got your glasses? Are they easy to find? I actually, by the way, big apologies to Craig Singleton. I probably made everyone feel bad because I didn't, I was going to be too cool to wear glasses. I'm going to encourage all of our guests to put their eclipse glasses
absolutely wear
on.
glasses.
Julie, you've got them handy?
I was so worried there were going to be no glasses. I ordered for the office like 3 months ago. I took a poll. How many of you are going to be here? I ordered for the office.
Good.
You can get glasses pretty much all over the place. I was in Target yesterday. They still had glasses. There were tents on the street with people selling glasses. You can get glasses.
Look at that. Yeah, you can't find them anywhere around here. I even went to the library over the weekend. It had been a long time since I had tried that. Can we see the sun on YouTube? We have a sun cam. There's an eclipse cam here, Julie. I don't know if we can show it. There you go. I never thought I'd share a box with the sun before. Julie, thank you. Don't stare at the eclipse without your glasses. Our Texas Bureau Chief in the throes of activity on this eclipse day. I'm Joe Matthew without a pair of glasses, but Kaylee Lyons will join the conversation next. We've got a lot to talk about on Balance of Power, only here on Bloomberg.